helping us and collaborating with us in arranging this refresher course for 3 days on company law, covering various aspects of the law. So I welcome today's first session speaker, CA Ivanshu Krishnadwala from Mumbai to this program. Welcome you, sir. I welcome the chairman of Salem branch of SIRC of ICAI, CA Shankar, to this program. Welcome you, sir. I also welcome all the participants for this refresher course. Welcome you all. Once again, I welcome you all to the 3-day refresher course on company law. So I am pleased to introduce the faculty of today's first session. So he's basically a BCom and FCA. He's a rank holder in both inter and final. He is a senior partner in CLP and Associates LLP, Chartered Accountants, Mumbai. And the offices at Vadodara, Chennai, Bangalore, Delhi, and overseas at Dubai. He is in practice since 1985. He oversees the audit and assurance practice of the firm, particularly audit of large corporates, including Fortune 500 companies. Ind AS implementation, investigation, due diligence assignments, and conversion of financial statements from IGAAP to IFRS, US GAAP, etc. He was the senior lecturer in accountancy and computer system at Narsi Monji College of Commerce and Economics, Mumbai, from 1986 to 2000. He is co-author of various books on accountancy and financial management at Mumbai University. He was a co-opted member and special invitee in various committees like Accounting Standard Boards, Ind AS Implementation Committee, Expert Advisory Committee, Research Committee, Corporate Law Committee, etc. He is a member of various group of ICAI for Financial Review Board, Report Board, Guidance Note on Schedule 3 to Companies Act 2013, Revision of Standards on Auditing, Economic Policies and Legislative Constitution Group, etc. He is a member of Shield Panel of ICAI for ICAI Awards for Excellence in Financial Reporting. He was the president of Bombay Chartered Accountants Society for the year 2006-07. He was the chairman of Accounting and Auditing Committee of BCAS till 2019-20. He is a compiler of columns from the published accounts appearing monthly in BCA Journal for more than 25 years. He has delivered lectures at various seminars, conferences, presented paper, and written articles for ICAI, BCAS, CTC, IFAC, IFAC, etc. on subjects of accounting standards, auditing, etc. Also conducted training for CLG and corporates. He is a director and member of audit committees of various companies. I am very much pleased to introduce today's faculty, CA Himanshu V. Krishnadwala, to this audience. Sir, you can, the floor is yours.
Sir, very good evening, sir. This is Shankar, Chartered Accountant. On behalf of Salem branch of SIRC, I welcome you for this seminar, sir.
Yeah, good evening to all of you. Can you hear my voice?
Yes, sir, it is audible.
Yeah. So good evening to all of you, Mr. Shankar, Mr. Santosh Kumar, I think the chairman of the Salem and Erode respectively, and all the participants who are there who have joined this call on a working day in the evening. I've seen the program for these 3 days which are there. There are a lot of things which are sought to be covered on the changes which are happening on the company law and the audit reporting. The first thing what I was asked to take is a little broader subject, which is on audit safeguards and financial reporting. So when there is financial reporting, what are the broad audit safeguards which you take up? I was also told by the CLCC secretary that also touch upon or take some salient features of Nidhi companies, because I understand that a lot of your members also deal with Nidhi companies and are auditors of Nidhi companies, especially in this area where you are all located. So these are the two things which we are going to cover today. I am sure going down the line, as I see the schedule, you have got CARO to be covered, you have got Schedule 3 amendments, CSR, private limited companies, loans, advances, and other things also which will be covered, which are more specific topics in that sense. So let me share a presentation. It's not a very big presentation. It's a small presentation, but it is covering all these possible things on safeguards auditor has to take on audit reporting. So let me see how I can share it.
Sir, can we allow yourself as admin, sir?
Yeah, can you see this? I have just started sharing.
Yes, sir. Yes, sir. It's opening. It's fine, sir.
So can you see this now?
Yeah, it is it is visible, sir.
Yeah. So that's the topic which I was asked to deal with. It's a very, very broad topic in that sense, because this can cover a lot of your standards. It can cover your Companies Act. It can even cover the Code of Ethics. Everything can be covered in audit safeguards and financial reporting. So what I was basically, or what I intend to basically cover is what is financial reporting, because everyone needs to know what is financial reporting. And as auditors, when we get into audit this financial reports, what are the safeguards which we need to take? Now, the safeguards could be at multiple levels. It could be at appointment level. It could be at reporting level and so on. So all that we are going to, on a broader level, discuss what are the safeguards and other things which are there as such. Once we finish this, we can then look at the Nidhi companies, which is a more specific and a technical topic, which is actually easier to take because there are provisions of Nidhi companies which are there, which can be discussed, especially the changes which came in the rules on 19th April 2022. But before that, let's start with this audit safeguards which are there, which you need to keep into account for financial reporting. If you see now, what is financial reporting? If you look at the Companies Act, and I'm sure a lot of you must have attended seminars on Companies Act when it came before 5-7 years. Now, these are the several sections which talk about financial reporting. So you start with that section 128 of the Companies Act, which tells you what are the books of account to be kept. And it says that section would say that you need proper books of accounts to record all your transactions so that it gives a true and fair view of the accounts. Then you have got section 129, which we will discuss in the next slide, because that is what we are ultimately going to look at as auditors when we issue reports on the financial statements. Then 129A is on periodical financial results. Now, this is not yet notified, but what this section is going to do is, just like listed companies, the government has taken the power to issue audited results for even non-listed companies for interim periods. So if it's a very large entity, the government can say that though it is not listed, you please prepare half-yearly results and publish it to the government or something. So that's a new section which has come in, 129A. Once the government notifies it, it not only gives companies, they'll have to prepare interim financial statements, and auditors will also have to review and audit those interim financial statements. Section 130 is on reopening of accounts on courts or tribunals orders. And so far, there have been 2 instances in India where the accounts have been reopened. One is in the case of ILFS group, and the other was in the case of Crompton Greaves Power, CG Power as it is called. In both these cases, since there were a lot of defalcations and frauds, and the loans were defaulted and all, the government made an application to the NCLT, and the books of accounts were reopened by the NCLT for a period of 5 years in both these cases. Section 131 is also reopening of accounts, but it is on voluntary revision of financial statements. If the board of directors consider that something is not properly stated in their financial statements, they can approach the NCLT and reopen the accounts again up to a period of only 8 years, but normally they do it only up to 5 years. Section 132 is on NFRA, and NFRA is something which you are all aware that the government has made NFRA a very strong body now, and that will oversee auditors in addition to the institute's disciplinary mechanism which is existing. Then you have section 133, which we are all familiar with, because that is the section where the government has the power to prescribe accounting standards. So whether they are accounting standards which are followed by listed entities or Ind AS standards, or whether they are standards to be followed by private limited companies, They are all notified and prescribed under Section 133 of the Companies Act 2013. Then 134 is on financial statement and the board's report or a director's report as we understand that. 135 is on corporate social responsibility. And now, as you know, a lot of importance has come on auditors also reporting for CSR, whether complied or not complied. 136 is the right of members or shareholders to audited financial statements. 137 what needs to be filed with the registrar. And 138 is on internal audit, which is now mandatory for companies which fall under that section. And on CARO 2020 also, whether there is adequate internal audit now needs to be reported. So if you did see this slide, there are 4 things which are highlighted, which are very relevant from an auditor's perspective. And that is what we are going to really talk about today. Auditor's perspective on the financial reporting which is there. And when you talk of financial reporting, these are the 11 sections which are really relevant for financial reporting which are there. So if you go to section 129 on financial statements says these things. The financial statement should give a true and fair view. They should comply with all accounting standards under section 133 and the format should be as per schedule 3 to the act. There are exclusions given for insurance companies, banking companies and companies in the generation of electricity. The financial statements have to be placed at each annual general meeting. Consolidated financial statements also need to be prepared if a company has one or more subsidiaries or associate companies. In addition to all this, a separate statement called a form AOC1 is also to be filed with the registrar of companies, but that is not subjected to auditor's verification or attestation. And finally, the section says that if the financial statements do not comply with the accounting standards, the deviations, reasons, and the impact needs to be disclosed. Now, if you look at the topic audit safeguards and financial reporting, Section 129 is something which an auditor needs to be very careful to see that this section is complied with. A lot of us do not look at this particular section because this is something which we take it for granted that this is a section which the companies would be following in that sense. But if you look at this section, it also tells you as an audit reporting what is relevant. So not only it is an auditor who wants to give a true and fair view, it is even the companies who are bound to give a true and fair view in terms of this section. Compliance of accounting standards is a main responsibility of the company. The format has to be as per schedule 3. On consolidated financial statements, again, the rule is very stringent. If you have one or more subsidiaries or even one or more associate companies, you need to prepare consolidated financial statements. And here, the definition of subsidiary and associate companies is to be taken as per the Companies Act, which means more than 51% subsidiary and more than 20% would become an associate company. From AOC1, the company has to file this, not the auditors, but auditors still need to verify if some information is going wrong on that form AOC1. And what is important is this: if financial statements do not comply with accounting standard, deviations have to be disclosed. What that means is, in addition to your SA 700, which is the standard on auditing for audit reporting, or any Ind AS which is not followed, the section directly also tells you that if the accounting standards are not followed, please give the deviation, why it is not followed, and the impact to be disclosed. Now, most of us only report there is a deviation. We forget to report why there is a deviation and what is the impact of the deviation. If you cannot know the impact, you have to write that the impact cannot be determined or something. So as an auditor, when you are trying to understand what are the safeguards, you need to understand this particular clause or section of the Companies Act. If you go on further on financial reporting, now, in addition to what is there in the Schedule 3, and as you know, Schedule 3 has been modified for April 21 onwards. So, and there is a separate session which you have in your program on this Schedule 3 changes. In addition to the Schedule 3 disclosure, there are several other disclosures which are required in the financial statements of a company. So you have got the section 186, which also wants you to disclose what are the loans given to others, what are the terms and conditions. Now that is specifically in terms of section 186, subsection 4. So if you miss that out, there is a violation of that particular section. Then if you look at the applicable AS or Ind AS, if you look at several standards, say you take the employee benefit standard, there are a lot of disclosures which are required by the employee benefit standard. If you take the segment reporting standard, if you take the standard on say taxation, your current tax and deferred tax, lot of disclosures are required as per the applicable standards. That is also required in addition to what is there in Schedule 3. And this also should not be missed out, that now there are other statutes which also tell you what needs to be disclosed in the financial statements. So you have got this medium, small and micro enterprises act, which tells you that please disclose, is there anything overdue, not due, and so on, in addition to what is there in the Schedule 3. If you look at NBFC companies or maybe the Nidhi companies, if you are auditors, the Reserve Bank of India has mandated a lot of extra disclosures for NBFCs and Nidhi companies. I am not talking of banks here because banks do not need to follow Schedule 3, but NBFCs need to follow Schedule 3. Nidhi companies need to follow Schedule 3. But in addition to what they disclose as per Schedule 3, as per accounting standard, the Reserve Bank of India also wants them to disclose a lot of things on ratios and sectoral lending and a lot of other things which are there. In case you are a listed entity, SEBI, the listing obligations and disclosure requirement also wants you to disclose some other extra things which are not covered above, which are there. So if you look at even a reasonably sized company, may not be a listed entity, but a reasonably sized company, there are a lot of disclosures which are required. So you have disclosures as per the Companies Act, as per Schedule 3, you have disclosure as per the accounting standards, you have disclosure as per MSME Act, you have disclosure maybe as per RBI if you are in the finance sector, and so on. And as auditors, when you are talking about safeguarding, a person who audits this not only tries to determine a true and fair view, it is also his responsibility to see all the disclosures are properly made. Because if the disclosures are not made, then the Companies Act, this particular section 129 is not satisfied. So for instance, if you forget some disclosure under, say, employee benefits, look at the second bullet of section 129. When you are not disclosing something as per accounting standard, then that 129 read with 133 would be violated. So it would mean that you will have to be clear that the company discloses each and everything which is required under the respective accounting standard or the Ind AS which applies to the company. Then now that these 3 slides were on financial reporting. If you have any queries or anything on financial reporting, let me know before we go on to auditors, because we are ultimately going to talk about audit safeguards and discuss more about auditors rather than just on the company's side or something. So if you have any questions, we can take questions right away after each section is completed in that sense. So any questions before I move on to this?
Members, if anyone have any questions?
Members, any query, please speak or no.
Okay, in case you have questions on the earlier topic also later on, you can always ask questions. We have enough time to even have a lot of questions and answer sessions. Now, when you come to audit and auditors, again, I am taking you through to the Companies Act 2013, some relevant sections which are there. And if you see, we stopped earlier at section 138, and now we continue with that 139. It talks about appointment of auditors, what is the process, 5 years and so on. How do you remove and there is a resignation of auditors. What is important to all of us is this eligibility, qualifications and disqualifications of auditors. Then remuneration of auditors, I have not highlighted this, though it is the most important thing when you do an audit, because without remuneration, what will you do? Ultimately, you have to run your office, you have to run your house, but that everyone is aware about. So I am not putting it here as a focus point. Section 143 is powers and duties of auditors and auditor reporting. 144 is you cannot render certain services because it's a conflict of interest. 145 talks about how do you sign audit reports. 146 talks about that you have to attend the EGM. 147 is punishment for contravention, and 148 talks about cost audit. So these are the sections in the Companies Act which really talk about audit and auditors. Earlier, what we were talking about is on financial reporting, and now we really talk upon this audit and auditors. Now, how does an auditor report? Firstly, he will get appointed as per that section 139 and 141. Then in 143, he will issue his report, and we will come to that very shortly. Now, how do you do audit reporting? Audit reporting is done as per section 143 of the Companies Act, and it lays down various provisions for reporting by auditors, which is talking about powers and duties of auditors and auditing standards. And there are 15 subsections over there, which also includes all this CARO and the ICFR reporting and other things, which we all carry out. 143.11 is really where the government has the power to notify things, and they are notified under 143.11 all these things. Now, if you look at section 143, it only tells you what do you need to report. So they tell you, please report on this, please report on this, and so on. How do I report? Under what format do I report is not given by the Companies Act. The format in which I report is actually given to me by my standards of auditing, which are notified by NFRA. Though they are formulated by ICAI, they are ultimately notified by NFRA. And today there are some 45 standards on auditing, which are formulated by ICAI and notified by NFRA. So when it comes to audit report, I have to look at two things. What I need to report. So which items I need to report is told to me by the Companies Act. Now all those items, how do I report, is given to me by my standards on auditing. So what is my auditing process? What is the management responsibility and so on? All that is given by my standards of auditing, and that standards of auditing tells me the format in which I issue the report, what comes first, what comes second, and so on and so forth. So that is the significance of this, or the interplay between that section 143 of the Companies Act and the standards on auditing which are there. Now, if you look at your standards on auditing, which is where your audit safeguards also are built in a lot of ways, you have got quality control standard, which is SQC1. You have got standards on audit and reviews of historical financial information, which in turn has introductory matters, general principles and responsibilities. There are 9 standards, risk assessment 6, audit evidence 11, using work of others 3 standards, audit conclusions and reporting 6, specialized areas there are 3 standards, on assurance engagement and audits there are 3 standards, review engagement 2 standards, and related services 2 standards. If you add up all this, it comes to 45 standards. And the chartered accountants who are who are just maybe up to 5 years of seniority understand these standards much more than the senior chartered accountants, because the younger chartered accountants have studied this well in detail in their CA exam and are aware of this. In fact, it is the experienced chartered accountants who need to get more knowledge on standards on auditing rather than the junior chartered accountants. So that is why when we conduct audit in our office, we may have a partner who is signing off, is a senior partner, but the team has to be of junior chartered accountants, because they understand these standards sometimes much better than the senior chartered accountants, who may be even your partners in that sense. Now, this is how your standards are again divided, and they are absolutely based on the international numbering of the standards. So internationally, they are called ISA. Here we remove the international word and we just call them standards on auditing. Internationally, they are called international standards on auditing. Here we just call them standards on auditing. So you have got SQC1, then you have got the series which are there on introductory matters, general principles, and in bracket what is written is how many standards are issued under each of those broad categories which are there. What is highlighted there is only the reporting standard, audit conclusions and reporting, which, as you are aware, is SA 700 series as we call it. And there are 6 standards in SA 700 series which are relevant for reporting, which are there. if you look at audit reporting, and this is something from the standards on auditing only, which is taken out to put in a chart like this. What are the objectives of your audit? The first objective, obviously, or the main objective is to understand the entity, to identify and assess risk of material misstatements. Now, for doing that, you have to understand the entity's environment, the entity's internal control. You can see that on two sides. You have to even assess the risk of a fraud and an error. So whenever you do audit, there are only these four things which you are really looking at. What is the entity's environment? What is the entity's internal control system? And is there a risk of material misstatement on account of either a fraud or on account of an error which is there? And whether you are doing the audit of maybe a Reliance Industries or you are doing the audit of maybe a very small private limited company, a family-owned private limited company, the objective will still remain the same. In a private limited company, you will still need to understand the environment. You will still need to understand what is the internal control. Maybe the directors and the owners are the same. So everything is controlled by the same directors. There may not be any employees in that sense. So it's the same process which we follow, whether it is big or small in that sense. So if you know that in your mindset, if you have that in your mind, audits really become very simple because the objective is then known. And whether again an audit is big or small, material misstatements can happen either due to fraud or due to error. You may feel that in a smaller private limited company where the directors personally run the whole show, there is no fraud, but that is not so. There could be a fraud of hiding some information from financial statements. Now that's a management fraud as we call it, which is more important from a private limited company's perspective, because in a big company, if a fraud is to be committed, a lot of people will come to know about it. In a small company, if a fraud is to be committed, there would be very few people who are aware of it. So the chances can be higher in that sense. I'm not saying that every audit which we do has a fraud risk, but you'll have to be aware about that this is one of my objectives. Now, based on these four things, the environment, the internal control, the chances of fraud and error, I design and implement responses to the risk to reduce my risk to an acceptable low level. Now, if I know there are these four things I have to keep in mind, I will go and understand all this. And if I understand all this well, my entire audit procedure would depend on how I have understood these four things. And based on that, I will decide what verification do I carry out. Having done the verification, I look at the financial statements and then I give a final assertion to the financial statements. And you can see this color. These two things in the center on the first and second is red, because that really is a red flag for us that this is what is my risk and this is how I have to do an audit. If I overcome both of them, I have this financial statement assertion in green, and the other four things which are there are all orange, because sooner or later you will have to either make sure that it goes through the verification process so that finally your assertion becomes green in that sense. And today audit is not doing that vouching or reconciliation or verifying bank statements and vouchers and so on. These are the four things which are important in an audit. And based on this, you will decide what is the sampling and all which you carry out. Again, whether it's a private limited or a big company, the same process is normally carried out in any audit per se. The next is what are again my perceived audit risks. Now, in the earlier slide, I said that I have to assess my risks. When I look at these four things, environment, internal control, fraud, and error, these are the risks which are possible. So what are the risks which are there? The risk can be errors and frauds, which is very easily understandable. Then there could be a risk on restrictions on data access. There would be a risk of incorrect application of reporting standards. And there, as you know, the auditor is directly involved because of that section 129 and section 143. Complexity in operations. The person whom you are auditing, the company which you are auditing is doing a complex derivative and futures and options trading structure. Now that's a complex structure. Unless you understand the business environment, you will not be able to do an audit which is there. And you have absence of audit trails, because though audit trail is becoming mandatory from next year, and I'm going to cover this towards the end of the presentation. And that's a big risk, that there are a lot of entries which are passed, but you don't have the backup available for those entries which are there. So again, to summarize some of the standards on auditing which are there, they say that if you do an audit, you have a risk regarding these 5 things which are there. And look at any audit, think of any audit which you are doing, whether it's big, small, and I am aware that most of the members who are on this call are from smaller towns and they are not from the bigger cities. But even in a smaller town, the risks of an audit still remain the same. Again, it is irrespective of whether you are following a ERP, whether you are following SAP, or whether you are doing everything on simple standalone Tally or a Tally ERP environment, which is there as such. So these 2 slides, if you really try to understand well this and this one, you will be able to understand how audit really works in that sense. Now let us link up the 2 things. So we first talked about, if you go back, we talked about financial reporting. Then we talked about audit and auditors. What are the standards on auditing which I need to follow? What are my objectives of audit? What are my risks of audit which are there? Now let me marry the 2 things and say that what are my audit safeguards and financial reporting which is there. Now what is my entire audit process on the financial reporting? There are 3 stages involved. One is my appointment process. The second is how do I conduct my audit? And the third is how do I report on my financial statements? Any audit, if you see, there are these 3 things which are relevant for any audit report to be issued. On appointment, I have to look at my section 141 and other things which are basically the financial interest test and the business interest test, which I'll come to slightly later. You also need to now look at this ICAI code of ethics and the section 144 restrictions, because if your appointment is improper, you obviously cannot go to the second and third step at all. So for your appointment, you need to look at these 3 things very closely. On the conduct of audit, what is important is professional skepticism, independence. All of you have read these words, but sometimes I believe a lot of us don't understand the real implications of these words. And then a lot of standards on auditing for planning, the risk assessment, documentation, and so on. The 2 charts which we just saw earlier in the audit thing. And on reporting, as we said, you have to look at section 143 to decide what is to be reported. And your standards on auditing here, which are there to decide how you need to report those things. 700 series, as we call it. And there is a new thing which is going to come in after maybe 3-4 months, which is called NO-CLAIR, non-compliance with laws and regulations, which also we will cover in some of the slides down the presentation. Okay, so any queries so far? This is again, as I told you, a very broad level presentation on audit. I am not going to deal with CARO or Schedule 3 nitty-gritties as such, but this is really going to give you a broad idea. And this is what we do in our office when we really talk to people when they join audit as to how you look at audit and what are the safeguards in financial reporting which you need to look at. So if there is nothing so far, let me go on with these 3 main things: appointment, conduct, and reporting. So on the appointment thing, you have got financial interest test, you have got business relationship test. So when you are appointed as an auditor, you obviously look at that section 139, which we saw earlier. And you also look at the section 141, which talks about qualifications and disqualifications. So on disqualifications, you have to look at 2 tests, which is financial interest test and the business relationship test. So in financial interest test, any person who or his relative or a partner is holding any security in the company or subsidiary, etc., of rupees face value of 1 lakh is not eligible to become an auditor. Now, in case you are holding these shares or securities, you have to take corrective action within 60 days. Now, what is important here is the word relative. And the word relative is, as per the Companies Act, it can cover your nephews, it can cover your maybe daughters, relatives, and so on. Now, how will you really find out whether your relative is holding anything? You may actually have some relative who is maybe a brother with whom you don't have good relations. And if you are appointed, say, a branch auditor of State Bank of India, neither you nor your relative can hold any shares of State Bank of India, or if you see the second bullet, can even take a loan from State Bank of India. So in practice, though we are not very, maybe we do not look at this very carefully, please look at this very carefully, because if you are appointed auditor of, say, State Bank of India, anyone in your family or anyone as a relative who is holding any shares in State Bank of India or any of the subsidiaries like SBI cards, or you have got SBI life insurance, which are all listed entities, then you can be debarred from being an auditor and your appointment would be illegal in that sense. The second restriction on financial interest is if you are indebted in excess of 5 lakhs or you have given guarantee in excess of rupees 1 lakh. So you have a relative who has taken a loan, a housing loan from State Bank of India of, say, 25 lakhs. The moment you are appointed auditor, the relative has to repay the loan, because otherwise you cannot take up that audit at all, because your relative is indebted in excess of rupees 5 lakhs. And the view is also taken that when you talk about indebtedness, even credit cards is something which you cannot hold. Because if you have a credit card which has a limit in excess of rupees 5 lakhs, then you are considered indebted to that bank in excess of rupees 5 lakhs. And obviously you cannot give any guarantee to the company or subsidiary and so on in excess of rupees 1 lakh. So though this section 141 is something which is there since the last maybe 8 years in the statute book, a lot of us do not really understand this or follow this closely. And in the process, when a peer review comes or when a declaration has to be given, most of us give wrong declarations that I or my relative is not holding any shares. How do you overcome this? Could be a challenge, because if you are not on good terms with your relatives, but he has a housing loan or something, how do you take care of it is something you have to tackle. But please be careful of this particular provision. And that is a safeguard on appointment itself. Forget conduct and reporting. When you are getting appointed, this is one of the most important safeguard which you need to keep. The second is business relationship test. You are disqualified as an auditor if you have a business relationship with either the company or subsidiary or holding company or associate. And all such relationships are construed as transactions for commercial purposes, except if it is professional services permitted under Code of Ethics, or they are commercial transactions at arm's length price, like those for doing business of telecom, airline, hospitals, hotels, and so on. So what does this restriction tell you? It tells you that you cannot have a business relationship with your audit company, with the audit entity. What is only allowed is if your client is, say, in the business of telecom, airline, hospital, or hotel, you can take his service provided it is at arm's length. If it is not at arm's length, again, you may get disqualified under this particular clause of section 141. Now, let me tell you, you are in a small town, say in Salem or Erode, and one of your client is a hospital. And unfortunately, someone from your family or someone fell sick and you take him to the hospital. The doctor says that, oh, you are my auditor. I will charge you only the cost. Forget free of charge. I will charge you only the cost. I will not charge you the higher margin, which I normally charge my other patients. Now, the moment he gives you a concession in the charges, you will be disqualified from becoming an auditor of that hospital. The reason is he is not charging you at arm's length. He has to charge you what he is charging to someone else. Now, a lot of people come and ask me, who will find this out? The question is not who will find this out. The question is whether you on your own are trying to be compliant with some provisions. Otherwise, if anyone finds out rightly, wrongly in future, not only will you be disqualified, you can even be held liable under the Code of Ethics and disciplinary mechanism which is there. And to a person who tells me that how will you find out, I normally tell the person that even if you commit a murder, you will get away with it unless the police come after you and find it out. So don't take it very lightly that how will someone find it out. But these are two things which I believe in appointment itself. It's an important safeguard which you will need to keep in that sense. Another important safeguard is on this, that there are a lot of services which are not permitted by the section, which is section 144. So if you are an auditor of a company, you cannot do accounting and bookkeeping, internal audit, financial information, MIS, actuarial, management services, and so on. What we have seen that again in lot of small towns, the client tells you that please do everything. I cannot afford two people. So you also do the accounting job. You also keep their books on tally, and you also carry out that audit which is there. Now that is clearly not permitted. Again, lot of people come and ask us when we question them that who will find this out. It's again, as I said, it's not a question of who will find it out. Some firms we have seen that they actually keep two entities. In one entity, they have their family members as partners and they do the bookkeeping services. The other entity, which is a CA entity, or something. At least that's the precaution which some people have taken. But in the same entity, if you do both these things, and it is known to the peer reviewer or anyone else, it is going to be a disaster for you because you may actually end up in the disciplinary mechanism which is there. A lot of discussion keeps on happening in the profession that in a smaller town, who will find this out? And if I don't do this, I will lose work and the client will not stay with me. I think it's a question of if there is a rule which has come, rather than being defensive and saying that I don't want to follow the rule, you have to think up some ways in which you can follow the rule and see how you overcome that restriction which is there or something as such. Okay. So this is again the second safeguard or an important safeguard right on your appointment itself, which you need to follow. So these are the two safeguards on appointment. As I told you, appointment, you have to get into some safeguards. And these are the two safeguards on your appointment which you need to keep in. This takes care of the Companies Act. It also takes care of the ICAI Code of Ethics which is there. Then a lot of safeguards are required when you conduct the audit. And as we said earlier, there are two things which you have to keep in mind. One is professional skepticism and the second is independence. Now, what is professional skepticism? An attitude that includes a questioning mind, being alert to conditions which may indicate possible misstatement due to error or fraud, and a critical assessment of audit evidence. Explicitly requires the auditor to plan and perform an audit with professional skepticism, recognizing that circumstances may exist that cause the financial statements to be materially misstated. Now, what this tells you is that when you start doing an audit, do not accept everything at face value. Please try to question the client as to whether what he is telling you is right or wrong. So you have a questioning mind and don't 100% trust your client. He may be a good friend. He may be a very reputed businessman in your town, but never trust a client 100%. Always keep a questioning mind. When you go to a doctor and the doctor asks you, are you having cough and cold? Are you having blood pressure? Though you may say that, yes, I don't have this, I do have this, I don't have this, he will still say that, okay, lie down, I am going to test your blood pressure. So he is not mistrusting you, but he has a questioning mind. And that is what an auditor exactly has to have, a questioning mind. And you have to tell the client that I am asking you these questions, not because I am not trusting you, but because it is my job to ask you these questions, because otherwise I am not doing my job properly. I am not justifying my fees in that sense. So professional skepticism is very important. And just to tell you, recently there was some survey done by some professional firm about the professional skepticism which exists in the Indian chartered accountants and skepticism which is there in the chartered accountants outside India. And the survey results actually said that the chartered accountants in India have much less skepticism than the chartered accountants outside India. And that is because as auditors, sometimes we trust our client much more than what is necessary. And that is why you have so many frauds which are occurring, because the chartered accountants also trust the client so much that everyone doesn't really get into things which are there. And a lot of frauds would have been avoided had you taken the questioning attitude or something in that sense. The second is independence. And on independence, if you look at the Code of Ethics, which came on 2019, the Institute's Code of Ethics, they talk about these 5 things: self-review threat, self-interest threat, advocacy threat, familiarity threat, and intimidation threat. Again, a lot of you may have read this or attended some seminars on this code of ethics, but these are 5 things and this is what they mean. A self-review threat is, it occurs as a result of the financial or other interest of a professional accountant or of a relative. So you are doing the audit of a client where your close relative is the accountant. Now that's a self-review threat. Or you are doing the accounting of the same client and you are also doing the audit. That's a self-review threat. So in addition to that, section 144, you will also get caught in this code of ethics independence threat, which is there. Then self-interest threat. You are doing the audit of a client where you are holding shares or your holding shares may be below that 1 lakh threshold. The section will allow you to hold shares, but are you still going to have a self-review threat in that particular client? Are you still independent in that sense? Advocacy threat. So if you have given an opinion to a client and finally when you are doing the audit for that client, you will automatically follow that opinion because you would never like to go against your own opinion in that sense. So that's an advocacy threat which affects your independence. Then you have got a familiarity threat. If you have a very old relationship, you have got a 20, 30, 40-year-old relationship, then there is a familiarity threat that nothing will go wrong with that client because you say that I know him so well, he tells me everything what he does, so nothing can go wrong. And therefore, even if something is wrong, he will say, oh, this was a one-off thing, please let it go. So you'll be sympathetic to that person. Your human emotions come in the way of your audit, which is there as such. So that's the familiarity threat which is there. And lastly, you have got something called the intimidation threat, which occurs when the accountant may be deterred from acting objectively by threats, actual or perceived. So sometimes intimidation threat means that if you find that something wrong is done by the client and you want to report that, you will still feel afraid that why should I report? Because if I start reporting this, I will lose the client, I will lose the audit. So that's the intimidation threat. And all these 5 together are, as we said, called the independence threat. So when you are conducting the audit, you have got these 2 things which are very important: your professional skepticism, a questioning mind, and the independence, which you need to be very careful in terms of the code of ethics. And that takes or talks about these 5 threats which are given here. When you conduct the audit, again, we are talking about risk assessment. So you have to talk about this standards on auditing. There are 6 standards on auditing on risk assessment. Again, as I said, I am not going to deal with any of the standards. All of you can refer the standards which are there and see what is risk assessment. And on audit evidence. How do you do audit planning? How do you gather evidence? What is your sampling which you carry out? There are 11 standards on auditing which only tells you about what is audit evidence, how do you gather audit evidence. And finally, your risk assessment and the audit evidence has to get into your documentation, because documentation is important, because what is documented is what you have audited. What you have not documented means you have not audited that particular thing which is there as such. Okay. Now that's on conduct. So on conduct, if I go back, we said there are these 3 things you need to see: professional skepticism, independence, standards on auditing, which is what we have discussed here on conduct also. And finally, the safeguards on reporting. And when we talk on safeguards on reporting, we said you need to adhere to section 143 of the Companies Act, and you need to adhere to standards on auditing on reporting. And there are 6 standards over there. So you have got, in audit reports, you can issue a clean audit report, which you can see is put in green, which is SA 700. You can give a modified audit report, which is SA 705. SA 705 will talk about a qualified opinion or a disclaimer opinion or an adverse opinion. Everything is there in SA 705. If you give a clean report also can have 2 more things, which is called the emphasis of matter and other matters which are there. A lot of discussion can take place as to what is a modified report, when do you give a disclaimer, when do you give a clean report, and emphasis of matter, and so on. There is also something called key audit items, which are in listed entities. And the participants put their this on mute. Yeah. So you can have a lot of discussion on this, on what are disclaimer reports, emphasis of matter, can an emphasis of matter be an alternative to a modified report, and so on. We are not getting again into that technical discussions. I am sure you have attended a lot of programs on that, and you are capable of taking similar decisions which are there. But on reporting, some other things which are important is this now. Reporting on non-compliance with laws and regulations, which as we call is no-clear. Now, if you look at the ICAI Code of Ethics, which came in July 2019, it said that any professional accountant, and that's the word used for any auditor also in the Code of Ethics, they have to address no-clear only when and if he encounters the same in the course of providing a professional service to a client. So if you are doing an audit, if you are doing a tax advisory, if you are doing a tax audit, it is all called in the course of providing a professional service. As per the 2019 code, also applicable to auditors and employees of listed entities. Now, what is this no-clear? In the course of your professional service, which is either an audit or a taxation advice or maybe even accounting or a tax audit, if you find any instances of fraud, corruption and bribery, money laundering, terrorist finding or proceeds of crime, securities market and trading, banking and other financial products and services, data protection, environmental protection, public health and safety, tax and pension liabilities and payments. If you find anything of this as part of your audit, even if there is no separate notice which is received by the client, you are supposed to report this as per the provisions of no-clear. So take for instance, let me give you a very simple example. You are in a city of say either Salem or Erode, and you are doing audit of a shop which is in jewelry business. So the shop or your client is into jewelry business, and you find out because he is your client and he has told you, or you have found out in the course of your audit that he is selling say 24 karat jewelry, but the jewelry really is only 21 karat jewelry, but he is branding it as 24 karat jewelry. You are aware of it. Now, in the course of the audit, if you become aware of these things, there is a law which has been violated by that client, and as an auditor, you are supposed to report that directly in your audit report. In case you find out that there has been a bribery done by that client and it is available in the vouchers or something, there is some corruption or a fraud. Now, the first instance of this jewelry 24 karat sold, though it is 21 karat, is nothing but a fraud. And if the auditor finds it out, even if there is no notice received by your client from maybe the government or your local authorities for fraud, as an auditor or as a tax consultant or as a tax auditor, you are supposed to write that in your audit report, that the client or the entity has done this particular thing which is wrong. Now, this is a very big reporting requirement which has started. And the institute, because this is still not aware to a lot of people, they have deferred this to 1st October 22. Earlier, it was applicable from 1st April 22, but the institute has rightly deferred this to 1st October 22. And because mainly of this lockdown and because it was not, a lot of members are still not aware about this. And what I understand is the institute is very soon going to come out with a FAQ on what do you look at, what do you do not look at when you do a audit which is there, and you have to follow this no-clear. Internationally, no-clear is followed today, and it has become a very big issue for auditors. Internationally, lot of audit firms refuse to take an audit client because when they are aware that they have done something wrong, they will say, I will not like to report something wrong. I rather not take up the client who is there. Give you another simple example. Your client is in the real estate business. It is making buildings, flats, and selling it. In the course of the audit, you find out that it has got some licenses by offering bribes to the local authorities and the municipal authorities. The moment you find that out, it is something which you will need to report in your audit report or to the authorities directly. Now, that is the mandate which is given to the auditors now under this Code of Ethics, the provisions of no-clear as we call it. Now, it is therefore better not to do the audit of such people rather than get into reporting things directly to the regulator and inviting action from lot of other things. Now, these are the reactions which people are giving that how do I report under no glare? And I am bringing this to your notice because that is a very important safeguard which you will need to be clear about when you do a reporting. Earlier, what we used to do, I only used to take a management representation that I have not violated any laws and regulations. But in the course of audit, if you actually have found out that there is a violation, obviously it would be documented somewhere in your audit plan. There would be some emails exchanged or something. It will become reportable and you will get into a problem under these provisions of no glare, which is there. I'm sure a lot of people have started thinking about their clients as to are their client doing something wrong and what will happen in case they need to report on this no glare provisions which are there. Let me also tell you that you don't need to report on simple things like say a traffic light violation. So if you violate a traffic light, you ride into a green light, red light, and you are fined by the traffic police, that is not something you need to report. That anyway gets disallowed under income tax laws and everything. But this is something which the client has still not got any notice, but you find it out in the course of your audit, and therefore it does become your responsibility to report this to the regulators. Okay, so that was on audit reporting. Before I go on to audit trail, I think we have had almost 1 hour of talking. Do you want to take questions now, or I finish another 5-7 slides and then you take up questions?
Sir, we will take the questions at the end of the session, sir. So
okay,
that,
fine. So let me complete this audit trail thing. Now, this is something I have included because again, this is something of a very important audit safeguard. Again, it applies in future, does not apply for the current year. But I believe in the current year, a lot of clients will need to be educated about this. Only then they will be prepared for this in the next year. So you had a notification on March 21, which had come about this audit trail for each and every transaction. The above date was then deferred to April 23 and now it is further deferred to, 22 and now it is further deferred to April 23. Now, this was the notification which applies for companies. Now, there was also a notification which applies for auditors, and this rule 11, where this year there are 3 clauses added, next year 1 more clause will be added, whether in respect of financial years commencing on or after 1st April 22. So 22-23, this rather 23-24, this will need to be then reported. Now, what is an audit trail which is there? Now, an audit trail means your software should have features for recording the audit trail of each and every transaction, creating an edit log of each change made in the books along with the date when such changes were made, and ensuring that the audit trail cannot be erased. Now, sometimes I have seen that a lot of professional firms or the auditors themselves tell the client that there are some transactions which you may not like to keep in your books, so please remove those transactions, that voucher renumbering and all can be done. Now, all these things is in the past now. Once this new provision comes into play, whatever is their transaction, whatever is the backup of the transaction, and whatever changes are made, everything has to be available for at least 8 to 10 years. It is not only for 1 year, but for 8 to 10 years. And the company has to keep all this, and the auditor has to report that this is available, and I have verified that there is an audit trail which is there. Now, had it been physical books of accounts, this would have been very simple because I would just cancel it and overwrite or something. In a computerized setup or in a ERP setup or in your Tally financials which you keep, this audit trail is not visible. You'll have to actually get into some IT experts to find out whether an audit trail is available as and when required for each of these 3 things which are there. And what are the controls which you will ask your client to keep? User ID and related controls, period to be predefined, transaction date, entry date and time, process for locking books on a periodic basis, appropriate checks, process of tracing changes on account of management override and so on, year-end entries, process for approval, tracing changes, closure of books, robust SOPs and RCMs for origination, maker, checker, etc. Again, let me tell you, this is not for big companies. What we are discussing today is mainly for the small companies which you all encounter when you audit, even in the smaller towns which you are doing your practice. And this audit trail is a requirement which applies all across, whether big, small, whether family-owned company, professional-run company, even a small company or a private limited company, all this is required. So even a small shop which is doing some business of, say, just dealing in, say, electrical items, they will also need to keep this audit trail, because everyone likes to have private limited companies, and this is all applicable to all private limited companies. And your reporting is there on audit trail. So which software is the client using, whether it was operating throughout the year, whether it has been tampered with, whether the audit trail has been preserved as per the statutory requirements, and so on. Applicable to all companies, preservation to be prospective, and you include in a large company, we ask clients to include this in the internal audit scope. A representation from client is required that there is no tampering done and so on, and that it would be preserved as such. Okay. So I think that's the last slide on this thing. I'm going to stop share. I will share the presentation later on after the session, or maybe by tomorrow, and the chairman of both branches can post it up on their website for the benefit of members. Before the Nidhi thing, I need just 10 minutes for the Nidhi. So if you need any question answers, we can do it now. And then I just take the 10-15 minutes for the presentation on Nidhi companies.
The members, we want to ask any queries, you can ask to sir.
I'm sure a lot of people have got frightened with this presentation.
Sir, it's a very nice one, sir. Sir, I have a query, sir. It's my personal query.
Yes, Shankar.
Sir, the same disqualification is applicable for the concurrent audit also?
No, this is only for statutory audit.
Okay.
For concurrent audit, you look at the provisions of the letter which you get. The bank have their own set of conditions where all this also could be there.
Generally, what the bank do is like they simply cut copy paste of this section and put it in the concurrent audit.
So then it applies. Then it applies. No,
that's what exactly.
Then it applies. Correct. Then it applies.
Because there are recent times for past 2 years before I started from 19 onwards, they used to mention the particular section of the Companies Act. So like, yes, sir.
Sir, excuse me, sir.
Yes, please, Mr. Madhukar.
Sir,
yes,
he's
sir.
Mr. Madhukar, past chairman of Salem branch of SARC, sir.
Good evening. Yes.
Good evening. Please to talk.
Yes,
to Please go on.
Yes, sir. So this no CLAR will apply to any advisory services given to.
It will apply. It will apply to advisory services also, because it is in the code of ethics, not in the Companies Act, so that it applies only to companies. It applies to all advisory services also. And let me tell you that there are large firms in Bombay and maybe in Delhi who have advised clients on this, setting up these offshore companies and all.
Fine.
And some of their partners have got arrested.
Okay. So when there is no report given in this advisory services,
even an email is enough. Even an email is enough.
Fine. Okay. Yes, sir. Thank you.
In other words, the institute says, please do not advise anything to do anything wrong.
Members, any query, or sir will continue that NBFC provision? Sir, I think you can continue the NBFC provisions.
So I'll put up that second presentation then. Let me share screen. Now, this is a presentation which actually the institute has prepared and sent it to me, and I've made some changes as required, because in Bombay, as you are aware, we do not really deal too much with Nidhi companies and all. So though we are aware, we really do not deal with really Nidhi companies as such. But since the committee told me that please also cover Nidhi companies, I requested them that please make a presentation for me. So this is made by the institute. And it's a very nice presentation they have made. I'll take you through this. I have made, of course, simplified things a lot. So what is a Nidhi company? What are the provisions of the Act, rules, exemptions? I will not cover everything, especially that last thing, pre and post analysis of the Nidhi amendment rules, because that is self-explanatory, and I will also share this presentation with you later on. So a Nidhi, as you know, is a non-banking financial company, and they are really formed to borrow and lend companies. And it is recognized under that section 406 of the Companies Act, read with Nidhi Rules 2014. And those rules of 2014 got replaced with this, some of them got changed with these rules of 19th April 2022. Now, the full form of Nidhi, and I do not know how many people were aware about this, National Initiative for Development and Harnessing Innovations. That is the full form of Nidhi. It's an umbrella program pioneered by the DST, Government of India, for nurturing innovations. And in terms of regulation, it is categorized as a non-banking financial company, but does not require a RBI license. You only need a registration under section 406 of the Companies Act. And it is not governed by RBI, but it is governed by the Ministry of Corporate Affairs. So though it is a NBFC, it is governed by the Ministry of Corporate Affairs, and that is why these rules which are there. Now, a Nidhi company typically works under this principle of mutuality or Paraspara Sahai. That's a Hindi word. Paraspara Sahai means helping each other intersay. Now, this is clearly something which in the south of India is a very predominant thing, where say a group of people come together, they contribute funds to a common pool, and whenever someone else in that group or someone in the group needs money for maybe a house or a vehicle or maybe buying some cattle or something, the group only from the money collected gives to that person. They collect that with interest, and it is divided among the same group members who is there. Now that's the principle of mutuality, where I collect money from the same group and I give money to the same group. In popular terms, we also call it sometimes a Vishi or something, and I'm sure a lot of people would have heard about this word Vishi, which is again a Hindi word, which is similar to that Paraspara Sahai as they call it. So it is a NBFC, but does not need or get governed by RBI. It is, however, governed by Ministry of Corporate Affairs. Now, some of the provisions which you need to be knowing are something like this. From incorporation within a 1 year time limit, your net own fund should be at least 20 lakhs. Now, this is a rule which came on 19th April 2022. So it said that if earlier you have formed a company and it is less than 20 lakhs, you have to comply with that 20 lakhs within 18 months of the 19th April. If it's a newly formed company after 19th April 2022, then your net own funds have to be maintained at 20 lakhs or more. If it goes below that, you will actually have to go to the government to see that I have got losses and my funds have gone below that. So it will never admit a body corporate or a trust as a member except as otherwise permitted by the rules. So only individuals can be the members of Nidhi company. You cannot have a body corporate or a trust as a member. And a Nidhi company cannot accept deposits exceeding 20 times of its net worth. So if your net worth is say 20 lakhs, your maximum deposits can be up to say 4 crore rupees. It cannot go beyond that in that sense. And the tenure of the deposit which you accept shall be only up to 60 months and the minimum of 6 months. So if you have got some members, say 100 members, you can take deposits from the 100 members, minimum 6 months, maximum 60 months. So these are the requisites or prerequisites of a Nidhi company. A Nidhi company will have the suffix Nidhi Limited after its name. The minimum capital should be rupees 10 lakhs and everything has to be equity. No preference shares are allowed. And within 1 year, the minimum number of members has to be 200. Net on funds has to be 20 lakhs. And the net on funds and the deposit ratio, as we said, should not cross 1 to 20. So if I have got 20 lakhs, I cannot do more than 20 times that 20 lakhs, which is say 4 crores. Unencumbered term deposit shall not be 10% of the outstanding deposits. So typically all these Nidhi companies, I believe, have members something between 300 to 500, because if it becomes very big, it is unmanageable. and you cannot have less than 200 members as a part of your Nidhi company. So to apply for a Nidhi company, there is a registration process which has been listed down very simply in the presentation. And there are some rules which have to be followed. Again, all these rules are really amended from 19th April 22. So you cannot carry out these activities, carry on activities of a chit fund, hire purchase, leasing, issue preference shares, open any current account with members, acquire securities of any company or control composition of any other company and so on. And no Nidhi shall make acquisition or all these restrictions are again there for a Nidhi company. And there are some exemptions, however, which are not really put up as of now by the government, but the government has the power to come up with an exemption on some of the exceptions which it can lay down in future. And some amendments were carried out on 19th April, and they have said that it is really in the safeguard of the general public that these rules have come up. And this capital and all really came up from these rules which are there. Now, if you look at this analysis, it is pre-19th April rules and post-19th April 22 rules, which I am going to leave it with you. I am not going to read all this because we have seen the salient features of a Nidhi company. So in simple words, a Nidhi company will have what? Say it has 200 members. From each member, it can collect deposit 6 months to 60 months. That same money, it can give money to someone else as a loan or something. The commercials can be worked out on the deposit which I take. I may say give an interest of say 5%. It has to be more than the bank. Otherwise, people will not deposit in the Nidhi company. So I give an interest of say 5 or 6% to the depositors, whoever needs money. And that is, these are small loans which I give of say 2 lakhs, 5 lakhs, something. I charge maybe 8 or 9% interest. It is more than what is given by the bank, because in a mutual thing, people know each other. You may not even take any security in that sense because everyone knows each other in that sense. And it is that public pressure which works in a Nidhi company so that the defaults are not normally there. And the difference between what you earn and what you spend after meeting all your expenses is your profit, and you can declare dividends or do whatever with that particular money. But some restrictions are very clear. Minimum 200 people, deposits 6 months to 60 months, net worth minimum 20 lakhs. My deployment or my borrowing deposits which I take cannot be 20 times my net worth, and so on. Once this becomes a big company, a Nidhi company will have to migrate to become a regular microfinance lending company or maybe a regular NBFC or something. A Nidhi company by its very nature is not going to grow beyond a particular level. So it could be in a small village, it could be in a small community. And as I know, there are several Nidhi companies in south of India, and a lot of them have also run away with the money. They have not followed the laws, and that is why the government is trying to incorporate all these changes so that the Nidhi companies do a service to the small people, the villagers, as it is really intended to in as that such. One last thing which I will like to tell you on Nidhi companies is about the reporting. On CARO 2020, there is a clause 12 where you need to report as statutory auditors. Again, a Nidhi company is a company registered under Companies Act. So all your reports apply, your CARO and everything applies there. Your section 143 also applies to a Nidhi company. And in CARO 2020, there is one clause 12 where these 3 questions are asked. Whether the Nidhi company has complied with the net owned funds to deposit in the ratio of 1:20. As we said that this is the ratio which it has to follow. Then whether Nidhi company is maintaining 10% unencumbered term deposits. Now these are deposits which I cannot encumber, which means it is the liquid ratio which is kept in a NBFC or a bank. And whether there has been any default in payment of interest on deposits or repayment thereof for any period, and if so, details thereof. So 3 simple things to report in a Nidhi company. And if you know the rules of a Nidhi company, these are straight away reportable. These are factual reporting which is there in that sense. So I think this is also a presentation, has a lot of information on Nidhi companies. The institute has done a good job on this, and this is also what I am going to share along with my other presentation which is there. So I think that is all I had for today's session. I think we still have about 10 minutes left. and we can have again some maybe observations or queries or whatever you all want to call it. But this was a very broad discussion, and initially when I was told to do this for 1.5 hours, I said in a very broad introduction, how will we take so much time, because this is not really a very detailed thing which I have done in that sense.
Sir, one personal question. In case of Nidhi company unencumbered securities, can we go with the private banks like HDFC and other bank?
That is possible. That is possible.
Okay. Which it includes NBFC also, or like can we go with that nationalized bank?
There is no restriction there in that sense. It depends on the commercial decision of the persons over there. The directors.
Got it, sir. Got it. Members, any query, please, sir is waiting for you.
So if members have no other queries, we can continue with the second session. I think second session faculty has joined.
Yeah, madam has come. Yes, correct.
So members don't have any questions, shall we continue with the
so
second
I
session?
think I can take leave then, because I have some other meetings post 5:30. So
sir, I would like to convey my vote of thanks on behalf of both the branches, sir. Sir, the session was really amazing, and we learned many things and updations about that a particular Companies Act and all those things. And the presentation was very neat, and like especially the font you are used is very amazing. I love that font and neat presentation, sir. On behalf of both the branch, I solicit my thanks for your presentation. So thank you very much, sir.
Thank you. Pleasure.
Thank you, sir. Yes. So we shall continue with the second session.
Yes, sir. Yes, sir.
Yeah. Thank you, sir, for the detailed presentation. So we will continue with the second session topic: loans, advances, and deposits, and professional opportunities for CS. So I welcome the faculty for second session. CA Padmashri Castro. Welcome you, ma'am.
Hello. Hi.
Yes, madam.
Yes,
it is
ma'am.
audible.
Good
evening,
yes,
madam.
welcome. Good evening, ma'am. So I'll let me introduce today's faculty. She's a partner with audit and assurance practice at MSKC and Associates. She's a Bachelor of Commerce from Mumbai University. She's a Bachelor of Law and a Diploma in System Analyst. She operates out of Mumbai office and has over 18 years of extensive experience in practicing and audit service across the industrial vertical of insurance, financial service, and manufacturing. She is in charge of keeping the audit team well informed of the latest technical development in various statutes and regulations, preparation of certain publication for internal as well as external use. She also does the standardization of various reports, templates, or papers for the purpose of audit. She is also responsible for quality assurance function in audit and assurance services, which technical include review of deliverables, conduct of online review, code review of audit files, and in charge of implementation of ISQM. She is responsible for coordination and conduct of all regulatory reviews. She possesses in-depth knowledge of standard of auditing, both Indian and international, quality standards, methodology, IFRS, company law, accounting standards, Ind AS, IPO related matters, and other statutes. Also possesses expert knowledge of audit tools. She imparts training program on technical quality methodology, audit tool, and other matters of professional interest. Contributed to WIRC publications, technical guide on financial statement of non-corporate entities, anthology on KAM and other reporting matter, model financial statements for non-corporate entities, e-handbook on role of chartered accountancy firm to ensure compliance with Securities and Exchange Board of India, prohibition of insider trading, regulation 2015. She is a member of Corporate Law and Governance Committee of WIRC, Special Invitee to Corporate Law and Governance Committee, ICAI, past member of SA, India AS Committee of WIRC, past member of Corporate and Allied Law Committee, WIRC. Technical Reviewer, FRRB, Technical Reviewer for ICAI Award for Excellence in Financial Reporting from previous year. I am very pleased to introduce today's second session faculty, CA Padmashri Crafto, to this audience.
Welcome, madam.
Yeah, thank you, Mr. Santosh and Shankar. Thanks so much for the introduction. So I'll just share my screen. If you can confirm that you are able to.
Yes, madam. You can very well share your screen, please.
Yeah. Yeah. Are you able to see the screen and hear me?
Yes, yes. Your voice is audible and screen is also visible.
Yeah. Thank you. We start off with the first thing. I think deposits, loans, and advances. I think we have had multiple sessions in the past also. So one of the things which I explained when I was contacted is that, to do justice to both the things in detail is very difficult in 1.5 hours. So let me try to do it the other way around. Something that is not very common, let me cover that first. And out of those 185, 186 and 73, I think we have multiple times read with, and we have done enough number of R&D on it. So I think there we can just touch upon few of the case studies and few of the critical aspects maybe. But then this is something that I thought that we should talk in detail if that's okay with everyone.
Yes, fine, madam.
Yeah. So just let me give you an introduction to what is this about. When we talk about chartered accountant as a practice and we talk about professional opportunities under Companies Act or under SEBI or under accounting, auditing, everything, we think of only few things and we think of only certain matters. So actually, when we think about the various opportunities that are available, it's quite wide and quite large, and there is so much that we can do and one can do. When I was putting up this presentation for the first session that I did at another branch, I think that was the time that even I realized that there are so many things that can be done, honestly, because all these things were on top of the mind, but then kind of we never put it down at one place. So I guess that's an effort that I have made. Maybe it's there are more things that I may not have covered, but then this is to the best of my knowledge and based on my experience that I have put it together. So we as chartered accountants have a varied role to play, and I have tried to briefly cover what all are the opportunities, what are the sources of opportunities, what are the significant opportunities, and role of CA in SEBI as well, as per SEBI as well. The overall opportunities that exist for CA are very vast. We are professionals who are charged with good governance practices, and people look for us for stability, integrity, good governance, and to suggest. So if I have to put it in a nutshell, I can say that once a chartered accountant is appointed as a consultant to a company, they think that everything that he's going to suggest me, he's going to tell me is going to make a lot of sense and I have to follow. And yes, they will have multiple consultants and they will discuss with everyone. But then once you gain that trust, I think there is so much of knowledge and so much of relationship that gets built that for almost everything you become the prime person who has to be contacted. So you gain that importance and you gain that position over a period of time. It's not to gain that position or to gain that importance we work, but it all talks about when we do that kind of a work. So in particular, if the person has a significant impact on the level and quality of the organization's corporate governance and governance culture, and it's often a pivotal role in assisting the board to achieve the entity's vision and strategy. There are two ways of looking at it when we are talking about a chartered accountant's role. One who is standing outside the organization and ensuring that compliances are happening, in the sense that statutory auditor or any kind of auditor appointed by a regulator, management auditor, and things like that. And another thing is within the organization also chartered accountant is required so that the compliances are appropriately ensured, and it helps the management in ensuring that the things are happening smoothly. One of the things that comes to my mind when I am speaking on the various opportunities, so if we talk about no disregard meant to everyone or any kind of educational stream, so if we talk about a certain particular industry or expertise or certain amount of kind of expertise that we talk about, then that person can work in only that industry. However, every industry, every company, every kind of organization will need an accountant, and also maybe if they are a little larger, they will need a chartered accountant for sure. So that is why sometimes I feel this very, interactive when we are talking amongst the friends, talking amongst families. They are talking about their industry, and they are saying that, okay, this is how we do this and this is how we manufacture. For example, someone is talking about mobile, how it is manufactured, what is the cost and what is the technology and things like that. Somewhere, if I have been into audit and if I have had some experience over certain number of years, I have touched upon few of the industries, and then I can kind of understand what they are speaking. It's not completely alien to me unless it is completely a technological or a coding that they are talking about. So somewhere we understand every business, we understand the overall feel of the business, and we are able to connect with ourselves, and that is something that we have at the core, which we can utilize very well wherever we go. So what are the sources of opportunities? So New Companies Act actually has introduced several provisions which will enhance the need for the service of the CS, either by mandate or due to inherent expertise. So there are certain sections wherein you can say that there is a mandate that the Companies Act has put, that this has to be done by a chartered accountant, and there is also certain things that are actually obviously by inherent expertise that are ensuring that it will be done over a period of time. Few of the things that I have tried to comply is through statutory audit, management assurance, and consulting opportunities. These are broad level broad level categorization that I have tried to do. As we said, external to the company, internal to the company, and working with the company. I can call this into three distinct types. So one external is statutory audit, and inside the company maybe managing management assurance, and working with the company is almost like a consulting opportunity there. So that's how it is structured, and there are lots of things that one can do in all these opportunities. Before we begin into each of the opportunities, few things that I would like to touch upon. As a person, or as a person into practice, we all know that we are not supposed to advertise, we are not supposed to solicit the business, but it is our work that will speak for us, and it is our work that will ensure that we have that kind of a reputation, and people will search for us and they will come to us, right? So that is what we have to build over a period of time. Now, having said that, one of the things that even ICAI allows, or even we all believe in, is networking. So come what may, I may be having a very good technical knowledge, but I may be having very good technical knowledge, but I will not be able to survive if I do not have a certain amount of soft skill. So if I'm not able to communicate, if I'm not able to put up my thoughts across appropriately, then it is very difficult for us to survive in any of this thing. And also networking and certain type of expertise sharing, what we call. It is not about referral, or it is not about exchanging the business, but if you have good networking, if you have opportunities within your groups, then it is definitely helpful. So above all, I think something that is very, very necessary for each one of us to gain is soft skill. It may be speaking skill, it may be interpersonal skill, it may be our behavioral skill, it may be the way of work style, everything put together. So I think that's very core, and that's very key for any kind of opportunity that comes to you, and that will stay with you irrespective of what work you are doing. Significant opportunities, let me run through one by one. We all know all these things, but I would just like to briefly touch upon these things. Statutory compliance opportunities. So there are big companies, there are small companies, there are medium-sized companies, there are all kinds of companies. Larger companies will need tech support, larger companies will need additional amount of support in terms of verification of the compliance, ensuring that the compliance are done. Now I'm talking about both within the company and outside the company. There will be compliance heads, there will be people who will be made responsible within the company to ensure that the statutory compliances are done in time. However, many a times there are consultants, for example, for various PF, gratuity, for the TDS and all these kind of things. There will be consulting opportunities, even compliance opportunities. Like in banks, there are various compliances that will have to be taken care of. The IRAC norms, the normal norms, the concurrent audit norms, all these things will have to be taken care of. So there will be a compliance calendar, and there will be a opportunity inside the company as well as outside the company with respect to statutory compliances, taking care of statutory compliances. This can be either done by the person himself, or it can be verified. So you will obviously, while looking at all these opportunities, one thing that is a base underlying that goes without saying is we will have to be very careful with the code of ethics, and we will have to be very careful with what is permitted as per code of ethics. What are the services that are permitted as per code of ethics? We should at no point be actually doing any work that is conflicting in each other. That will always have to be taken care of. I have listed down here. I'm not much going to get into the code of ethics part as to what is the conflicting service, unless we have a question specifically on certain services. Otherwise, we have to take it as a base criteria. Second thing that we can talk about is internal audit opportunity. Internal auditor can be within the company, so you can get appointed as an internal audit person within the company, or the team head or the team member, whatever. Or there are companies wherein they will have only few people in the internal audit department, but they will outsource the internal audit function to someone. So you can take up that internal audit assignment. So if it is 138 is applicable to the company, or if section 138 is not applicable to the company wants to get the internal audit voluntarily done, so you will have an internal audit opportunity over there within the company or from outside. And the third opportunity that comes up within the firms, how I can put it is, say for example, I'm a firm in Chennai and I have a very large internal audit mandate, but the internal audit has to be done in various branches within say Tamil Nadu and Kerala. So how do I go about it? If I have my friends, if I have my associates there, then what I can do is that I can actually take staff from there, or I can give some work to each of these firms, and then I can get it done from there. And if the main contract permits, if the subcontracting is permitted in the main contract, I can do that, or I can take staff from there and ensure that I can take that. There is a reverse opportunity if you see there. That means giving the staff on outsourcing basis to maybe another firm is also an opportunity that can be seen. And outsourcing is growing. Hello? Sorry?
Hello?
Yeah? Hello?
Madam, it's a wrong call. You can continue, madam.
Okay, sorry. I thought someone is speaking.
No, not that.
Sure. So outsourcing can also be seen as a very big opportunity, because outsourcing can be within the firms, to another firm or to the company. So in the compliance opportunity, in the internal audit opportunity, there always has an opportunity of getting outsourced. So they don't want to give you that entire function, but they want people to do that. So many firms are actually thriving and they are existing because of outsourcing. They have, they make up margin on the people whom they outsource. People are on their payroll, but they actually offer outsourcing services with a margin. So outsourcing can be within the firms, or it can be beyond the firms, that is to the company or to someone else. There are many offshore outsourcing opportunities also, so which are coming up. India is actually seen as a as we all know, it's a good English speaking country which understands the requirements of many of the European and US based countries. There's a lot of outsourcing opportunity that exists from there, Australia, New Zealand, and everywhere, because here the advantages that they see is that we understand the requirement. We are an English speaking country, the cost becomes lesser for them. And now one of the things that I would like to add here is that yes, COVID scenario and 2.5 years of work from home has in a way opened wide kind of opportunities, doors to opportunities in a way. For example, few of the firms are not actually I would say they are location agnostic. So they don't want that you have to come to the office and you have to work every day, but you can work from wherever you have, and that gives a lot of work-life balance to the people. And so say for example, someone in Bhopal, if earlier he would have got a opportunity to work in a firm say in Mumbai, he would have to travel, make his settlement here, and the cost of living, this, that, so many things would have bothered, and then he's staying away from the family, blah blah blah, all that. Now there are so many firms or so many companies that offer permanent work from home kind of a situation, or kind of an offering. So that has opened up so many doors of opportunities to individuals, and in turn the companies and the firms are also getting good amount of talent from all the interiors. So I think, yeah, with all the hardships that we have faced from COVID, I think something that has been on the better side or on the good side, I would put it this way, that it has actually opened the doors very wide, and there is no boundary, or there is nothing that actually one sees as to when is it that you can work, or whether permanent work from home is available, temporary work from home is available, or how is it, and whether I will be able to do it, and whether I have to go there. So there are so many questions that actually have got automatically answered there, and these opportunities actually help everyone, individuals to grow, as well as the firms to acquire talent. So outsourcing is one thing that definitely comes a long way. Certifications. There are various numbers of certifications under Companies Act which are required. For example, if the company is going for a buyback, there has to be a certification. If the company has to go for a merger, there has to be a certification. If the company is doing, say under Ind AS, whatever valuation, fair valuation has to be done. So all the fair valuations has to be done by the registered valuer. So wherever, if you see the Schedule 3, I think one of the sessions was on Schedule 3, and if you see Schedule 3, if someone has to actually if there has to be a disclosure with respect to who has done the valuations in the company. If it is not done by the registered valuer, you will have to specifically disclose. So there can be a share valuation, ESOP valuation certification. There can be a specific fair valuation under Ind AS for various kind of securities, say 109, 32 and things like that. That's another thing. And then also, certain type of asset IP valuation and things like that. Intangible valuations, largely restructuring, business model valuation, forecasting, and various kinds of valuations plus certifications that one has to do. So that again opens up a large amount of opportunity. All you have to do is that you will have to identify what is applicable to which company, and kind of analyze the balance sheets, analyze the financials, talk to the people more, and ensure that and actually guide them right, and you will get more and more opportunity into it. And valuation is a very big pool. And Ind AS being applicable, I think it's an ocean that has been opened up. And when we are talking about valuation and certification, let's also touch upon, it's not directly coming from Companies Act, but yes, in a way it is coming from Companies Act. The Ind AS conversions, or the Ind AS support, or the Ind AS audit. So how I would put it, there are three different things. One is statutory audit, which is as per Ind AS, which the auditor will have to do. Second is Ind AS support, or the financials support. How do you get that? So the company is newly into Ind AS. It doesn't have good resources. It doesn't have people to support. So a consultancy support may be taken, or an outsourcing service may be taken. And another thing is Ind AS, if first time convergence, we all know that if first time convergence is happening, then there is a lot of opportunity to actually get done to get the work done. Next is due diligence. I think due diligence is not actually mandated by the Companies Act, but it is one of the opportunities that is coming up from the Companies Act. How I would say is that due diligence is so common. Even if you want to take up a startup, a unicorn, anyone, due diligence is done. And one of the things that you have to certify is the valuation of the shares and things like that, and also under the Income Tax Act. So due diligence comes as a natural opportunity whenever there is a merger, acquisition, restructuring, corporate finance, anything that has to be done. I think due diligence is something that comes as a opportunity, that arises as an opportunity from Companies Act. Drafting mergers and acquisitions is not limited to mergers and acquisitions. I would say drafting of various schemes. documents. So it can be ranging from memorandum of association to articles of association to ESOP scheme to merger scheme to acquisition scheme to restructuring scheme. There are lots of schemes that the company actually goes through, and then all this scheme drafting is itself expertise that rests with many of the chartered accountants, and they do offer these services. Compliance function. Yeah, this is something internal to the company. If it is a compliance function that is internal to the company, then that is also can be something that can be offered by the chartered accountant, which we discussed, I think, much in detail. Filings, all said and done. Various types of filings. Now, I'm not talking about a company where full-time company secretary is supposed to be there. So I'm not talking about those compliances. But then there are various filings with income tax, with under the Companies Act also. There are various filings that happen, ROC filings and things like that. That can also be a support that can be provided by a chartered accountant. Yes, this is predominantly provided by CS, but I have seen many chartered accountants also doing these filings. We can talk about incorporation of the company. If you all notice, there has been certain errors in the incorporation of the company and certain documents which are wrongly certified by chartered accountants, and ICAI had come up with a announcement with respect to, please scrutinize whatever you are submitting and then ensure that you're submitting the appropriate documents. So we have to be very careful here, but definitely incorporation services can be provided by chartered accountants, and this is one of the opportunities which we see every now and then. This keeps coming up. MOA, AOA drafting, we talked about. Certification, we talked about various types of certification for the purposes of incorporation itself. And the changes to MOA, AOA also we spoke about. Secretarial compliances, yes, various types of filings. Secretarial compliances. Now, one of the things that I have interestingly observed is that this is predominantly done by CS, but then drafting of minutes and registers, maintaining the minutes and registers, this service is also offered by CA. Who have the competency do it. So we review it every now and then, but then we can offer support over there, not to certify, but to ensure that, for larger companies that need this kind of support. And obviously, while doing this service, secretarial compliance service, we should ensure what is permissible by code of ethics, if at all we are doing a statutory audit or an internal audit, because then that will amount to self-review threat, because we should not be ending up doing the review of the work that we have prepared. So that has to be taken care of, but then certain services in this area can also be very well provided. Corporate governance certification, if it's a larger company, there are two ways of looking at it. One, corporate governance as per SEBI LODR, there are lots of requirements in corporate governance, that is from preparing of the risk related policies to the certification. So the one who does the certification cannot prepare, obviously, but both sides of the opportunities exist. Either you can do the certification or preparing the company for the corporate governance structure. So that is preparing all the risk management policies, helping them in achieving the best corporate governance, preparing the corporate governance report, and so on and so forth. So there are lots of services that can be offered in terms of this corporate governance. That is what we talked about, corporate governance structuring. Corporate governance structuring is something that you will lead the company to do the best practices so that they get certified as required under SEBI LODR. Now, this is one of the opportunities under SEBI as well. Okay, let's talk about IFC. IFC, there are various phases, various stages of IFC, and IFC becomes applicable to the company. Obviously, as an auditor, you will have to verify and you will have to certify. That's one service. But other than that, if you're not an auditor of the company, there are various facets of IFC. You can actually structure the IFC. You can actually help in preparing the RCMs. You can actually do the process audit there. You can also ensure doing the management testing. So IFC guidance note, if we see, it says that management is responsible for preparing the RCM. It has to ensure design and implementation is properly done. It has to ensure that testing the operating effectiveness is also done. So we can help in actually structuring. We can help in preparing RCM. or from the management side, we can even offer testing of the RCMs or the controls. Further, updation of the RCMs, risk management, all these things can be very well done. IFC is a very vast area. For example, a large company, large listed company, not even a listed, large private limited company, I had seen to implement IFC, to prepare all the RCMs and to implement IFC. It was a good chunk of 5 to 6 months assignment, with 7 to 8 people. So you can have something of that volume, or you can have 2 people in a smaller company wherein IFC is newly getting implemented. And every year you can offer to actually upgrade the RCM based on the process improvement, or you can do the process audit, or you can do the testing from the management side. Manpower supply, this is in a way, outsourcing, in the sense that when a company is in need of people, when other firms are in need of people, you can very well have, if you have surplus staff or if you're employing people for those purposes, then you can ensure that manpower supply is done duly, and you are actually able to support the people in terms of the management, in terms of manpower supply. CFO service. This is also very widely seen service. There are virtual CFO services that are provided. So when I talk about incorporation of the company, there is another service that is associated. Many people take this, but this is slightly risky proposition. When other country, when there is a company in another country who wants to set up a business, so they offer a place of business for a year or so till the time the company settles down, and they also offer CFO service to that company for a certain period of time. So there is a virtual CFO or a CFO service that is offered. So the person who is, say for example, if I am running a CFO firm and if I want to provide this service, I will be the CFO of this company till the time someone else actually gets into it and gets managing these things, because there are various authorizations and various things that have to be done by a CFO or from a financial controller perspective. So that kind of service is also provided. Help in preparation of financial statements. This can be, when an auditor is appointed, most of the companies think that we are the ones who are supposed to prepare the financial statements and we are the ones who are supposed to audit, which is actually not right. We are not supposed to prepare it. The company is supposed to prepare it, but we actually do so much of hand holding that we end up as if, we are responsible for the financial statements. However, apart from those things, you can only offer help in preparation of financial statements. So what does that mean? In case if the company's accounting is complex, and then in order to ensure that everything is compliant, one can actually help only in preparation of financial statements. That can be a standalone service in itself. So if my friend is doing audit and he wants to retain his independence, because code of ethics and independence is so heavy these days that if you do conflicting services, you will have nowhere to go. So if the company does not have competency, he tells me that whether you can prepare the financial statements, because I am the auditor, I'm not able to prepare the financial statements. Very well, I can prepare the financial statements and he can go ahead and audit the financial statements. So that kind of a service can be very much offered. And with the new Schedule 3, with so much of disclosure that has come into place, this can be a very, I would say a lot of opportunity should exist for this. A few of the certifications that are actually mandated under Companies Act, if I have to put them together: INC 8 declaration in case of incorporation, DIR 3 has to be attested by CA, Inc 21 declaration prior to the commencement of business one has to give, Inc 22 notice of situation of address or the registered office of the company, Inc 28 notice of order by the competent authority, whatever, MGT 14 filing of resolutions and agreements to the registrar under section 117, DIR 12 appointment of directors and KMP and changes among them that has to be certified, ADT 1, which is obviously information on appointment of an auditor, and AOC 4, certification by CA in whole time practice for filing the financial statements with the ROC. So all these kinds of certification, I have just pulled out the major ones and have tried to put it over here as to what are the certifications that are required under Companies Act. There are many more which one can actually look into when you read into the sections a lot. So I gave other examples of buyback, QIB, any kind of issue of shares, ESOPs, mergers, acquisitions, all those I have already given example about. So I think that is a lot about what are the things under Companies Act. There are lots of opportunities that exist under Companies Act. I have not touched upon accounts audits. So, accounting opportunity. So that's a different thing altogether. But then I think I've only tried to cover the Companies Act. Further, with respect to role of CA under SEBI, means in SEBI means not inside SEBI. I'm saying that is obviously appointment body and it is a government body. So I'm not touching into the appointment of anyone who is employed with SEBI. But however, I'm trying to touch upon something that is under SEBI, in the sense as per the SEBI regulation, what all are the things that one can do. One is a person can be responsible for evaluating validity and reliability of company's financial statements. So if we see that annual report, so putting together annual report, the director's report, the corporate governance report, the financial statements, everything putting together, connecting, crossing, cross-referencing, checking, verification, everything, that can be a service that can be offered by a CA. Assess the risks and help in fraud. So this is basically ERM, or the enterprise risk management, that we can talk about. So based on SEBI LODR, there is a corporate governance framework that is necessary. In case of bank and in case of NBFC, in case of insurance, it is furthermore detailed, and people are required to ensure that these things are existing and functioning appropriately. So these can be some of the things that can be used as an opportunity, and one can actually develop their expertise around this and help ensure that it is the company is compliant with these things. Improving the disclosures and accuracy, we talked about preparation of the financial statements. So there are lots of things that even SEBI will come across and it can send notices if certain non-compliances are there. So continuously improving the disclosures and accuracy and helping the company in ensuring that the financial statements and all other reportings basically are appropriate is something that can be provided as a service. Order forensic audit wherever required. So SEBI can actually order forensic audit wherever required. If you get empaneled under SEBI, and if you get empaneled under certain bodies, you may get forensic audit opportunities. So we all know that wherever the borrowing is more than 50 crores, RBI has mandated that a forensic audit is necessary. So that is another empanelment that you will need, and this is another empanelment under SEBI. If you meet the eligibility criteria, you can get empaneled, and then you can get forensic audit assignments from SEBI as well. Integrity of audit reports. This is another verification that can happen. SEBI can appoint you for verification of certain audit reports and certain annual reports also. This is another service that can be provided. So you will have to get empaneled, and then you will be able to do the reports, do this service. Audit actually provides investors with additional assurance and helps in making making investment decisions. So it's very necessary that auditor is most important commodity as such, and then most risky commodity also, but then audit is what audit is. Again, valuation under SEBI is also possible because for again mergers, acquisition, ESOP, issue of shares, any kind of things, valuation is very much necessary. Corporate governance structuring we spoke about. Independent director services. As a chartered accountant who is in full-time practice, I am allowed to be providing independent director service. I can be a non-executive independent director. So, and then we all know that people are in demand with respect to independent director. That is another service that you can provide to any of the listed company. Consultancy or advisory to any of these companies on various aspects of SEBI, dealing with SEBI, or compliances with SEBI. And there are so many, because there are quarterly compliances, there are half-yearly compliances, there are yearly compliances, there's corporate governance structure, there are so many things that are available. So one can specialize in SEBI consultancy and SEBI advisory itself. IPO. When we talk about IPO, it's not something that will start today and it will end tomorrow. It's a very lengthy process. It's a step-by-step process. So IPO starts today if someone has to get listed after 2 years, 3 years. So first of all, the search for the peer-reviewed firm, and then the search for the bankers, and what all are the opportunities and things like that. Let's look at it from two sides, one from the company side and one from the auditor side. From the auditor side, you can be the firm who can be the auditor, and then who can be then the issuing the accountant, that is the expert accountant or the certifying accountant, who will be actually signing the examination report, the comfort letter and everything. So you can be on the audit side, and on the company side, you can be on the helping of the company. So there are firms who actually only help the company in achieving the IPO. So they will be hand holding throughout the process, step by step, in reviewing the company. And there are firms which actually act as mediator between the statutory auditor, company, and the merchant banker. So the requirements and the coordination and the continuous emails, and because there is a flow and flood of emails that happens, so what is done, what is pending, what is required, and then coordinating and putting in place together, all this is a huge task. So people offer this kind of services, wherein they call it IPO support services, IPO coordination services. So this is something that's very much available, and you can be on that side. Also, preparation of financial statements. If previous financial statements have been prepared on another gap, that is IGAP, and not on Ind AS, maybe for the purposes of transition, you can prepare the financial statements, or you can audit the previous year's financial statements, as the case may be. So that actually becomes a big amount of work itself. Audit or reviews, that's very commonly known. So all kinds of statutory audits and limited reviews, SRE 2400 or 2410, as the case may be. So that's a service that you can very much offer under SEBI. And also the certification, if SEBI requires any kind of certification, then certification is another opportunity that one can see, and you can always provide that as an opportunity under SEBI. Preparation of FS, again here from the same angle, that you can have specific preparation of financial statements compliant with all the requirements. Preparation of annual report, we spoke about the putting together all the requirement from the director's report, corporate governance report, to the financial statements and everything. Putting together the annual report can be a service that can be provided. Review proofreading of annual report. Yes, this is also got done by few of the companies. They want an independent person to just go through the entire annual report and find out if there are any errors. So proofreading or review of the annual report is also possible. The latest on the block is sustainability services. Everyone must be aware of this greenhouse and sustainability reports and things like that. This is a growing, I would say this is very new, and this is something that is providing a lot of opportunities. So Institute also provides sustainability related courses. So if you're interested, this is the next big thing that will be happening in my view. That's my personal view. This is the next big thing that will be happening. The integrated reporting, what you call as how much carbon footprints you need, you actually leave, and what is the sustainability, how are you running your business on a sustainable basis, what are the steps that you are taking about, what are your greenhouse gas emissions and things like that. And there are lots of standards also that are going to be published, because already across the board there are across the countries there are already standards that are published, and this is a new thing that will be happening. So if you want to get specialized in this, and if you want to provide this service, there's a huge opportunity waiting for it. As of now, you will have to hunt for the opportunity, but the take is that later on it will come hunting you, because if you are an expert there. Litigations, all kinds of litigation support with any kind of, SEBI or any other authorities, that is always an open matter that you can provide, and that services always thrive and that exists. So litigations, you can always provide the litigation support. Few of the important regulations under SEBI, a substantial acquisition of shares takeovers regulation. Under this also you need certificate from statutory auditor. ICDR, so basically that's the one which governs the IPO, and there are lots of services that one can provide. Now, one of the things when we are talking about IPO, I will just take a few minutes to elaborate. When we talked about as an auditor, what all things that I will have to do: examination report, comfort letter, audit report, and things like that. But there are so many certificates that will have to be issued to the merchant banker or to the SEBI. So many of the firms, we don't do all the certificates because we see many of the certificates to be from the previous year, or it is based on some other data, and we already have, say, some of the firms already have so much of work that they don't want to get into these kind of certificates. So there is a host of like 40-45 certificates, out of which people end up doing, the statutory auditor ends up doing some 15 to 20, and then the 15 to 20 is done by other chartered accountant firms who can actually take out some time and actually do justice to the work that they are doing. So that's also an additional opportunity that is available always. So you will have to pick and choose, but then you will have to do some research and you will get into all these details more. SEBI LODR, we spoke about very much in detail about the SEBI LODR and the opportunities lying there. Okay, so a brief touch upon courses one can do after CA, because we are talking about opportunities, and opportunities will knock the door only when you have expertise. Technical knowledge is our core, and without technical knowledge, we will not be able to survive. So I thought we will just put across few of the courses that our institute offers us, so that you get a quick glimpse of it. And if you think of doing anything and specializing in any of the area, then that is something that you can always look for. So one is DISA, we all know, and you can always be an ITGC auditor also, because many of the companies have IT systems that are so complex, and many of the firms do this audit. So there can be a ITGC audit that you can offer as a service to these companies, which actually helps in ensuring that the ITGC is intact. CISA certification is something that's not offered by the institute, but then you can always do after CA or along with CA or before CA, as the case may be. Certified internal auditor, if you want to get specialized in internal audit, then you can always do this CIA. CFA, financial analyst, if you are into business forecasting. So, many of the companies do have these issues of cash forecasting, and then they also do it for their internal purposes. So for all the financial forecasting and the cash flow forecasting and the business forecasting, you can do a CFA. And then the financial modeling is another service that actually is very much there on the block, and which is available to be provided. So CFAs are the ones who largely do this kind of service, but so that enhances and polishes your skills. CPA. CPA, if we do CPA, there are two things. Being in India also, you will be able to sign certain states in US allow you to sign from here if you have an active CPA license. So if you do CPA, then there is a demand for CPA, because many of the US companies, subsidiaries, they look for certain reporting to be done from India. So this is another course that will help you in bringing up in polishing your skills. ACCA is for IFRS and ISA and things like that. Not ISA, sorry, IFRS certification. ACCA helps you in getting a global edge, and it acts as an additional certification for you to understand things better. Investment banking, there is Ind-AS course also offered by institute, which you can do if at all you have not passed in the Ind-AS syllabus like us. So I think that is one thing that is available. Investment banking courses are available by stock exchanges. You can do investment banking courses. You can be on the equity research side. So that also will help you enhance your skills. CMA is another thing that will help you if you want to do from the management assurance function. If you want to do certain management accounting functions, CMA will definitely help you. LLB will always help you in understanding the law better and making your interpretation skills sharper, because that is something that we always look for on day-to-day basis. Just a quick glimpse on, as we are talking about opportunities, what are the types of jobs that are available in the market. There's part-time job, huge amount of part-time job or a freelance job that is available in the market. Full-time jobs, yes, very much in the company, in the firms, in all the financial institutions, banks, everywhere it's available. And freelance assignment basis, this is I think this part-time and freelance, these are the two things that have been actually opened up very widely because of the COVID times. ICAI also has got a few of the websites wherein women who have taken a break can actually start working now on part-time, freelance basis, full-time basis. There is also a job portal on which you can register. Even the employer can register, even the employee can register. That means the job seeker can register, and there are good opportunities that come up there. I think those are the things that one can always look forward for, and from where he can get more and more work from. I think largely that's about all the professional opportunities that are existing in the market, and what I have come across with respect to both Companies Act as well as SEBI. I have not touched upon the accounting side of it, because accounting side of it is also, there is a lot of opportunities that are available on the accounting side of it as well. So move on to the next topic, which is actually section 73, 185, 186 of the Companies Act. So, I will not go into the definitions and detail, because these are things that we do every day and we have read it a number of times, and each one of us have so much of interpretations. Okay. So I will touch upon few of the important things only, though the presentation is elaborate, because I thought that when we are putting up the material, let me put it up in detail, because it will come to use for someone or the other. But then I'll skip few of the slides and I'll directly go to the important ones or the critical ones. 73, we all know what is a deposit, and I will just touch upon permissible or non-permissible deposits. What is permissible? It's given to the members of the public. Permissible but subject to conditions specified in the rules. Director or relative of director, permissible, but the director or relative will have to give a declaration in writing that money is not given out of borrowed funds, and company will disclose it in the board's report. So that is the condition. Employee, permissible up to the annual salary. There should be a contract of employment with the company in the nature of non-interest bearing security deposit. This is something very important. We all end up forgetting this employee portion, because employee loans are so common that people will often forget this. Any other individual, non-permissible. When we are talking about section 73, it's also necessary to importantly, it is necessary to remember Unregulated Deposits Act. There is another act which is Unregulated Deposits, which completely prohibits any kind of deposits that is to be taken or given by anyone to anyone without any proper channeling. So before this, I think Himanshu sir just was talking about the Nidhi company and how it operates. So actually, large part of it comes under the Unregulated Deposit Act also. Again, proprietorship firm, non-permissible, because this is not covered under section 73 but covered under unregulated deposits. What is under HUF? HUF, it is not permissible. Partnership firm also, it is not permissible to be taken deposit from. Any company, permissible, so that becomes ICD, provided you have compliance with section 179(3) and 181(c). So the limits under 181(c) will be applicable and 179(3) will be applicable. Banks, it is always permissible. Trust, it is permissible subject to certain conditions. And if it is outside India, then it is subject to FEMA conditions. And then once you comply with FEMA, then only you can take deposits. What are the things that you will have to do as per section 73? You have to put up a circular. It has to have an explanatory note. It has to give an advertisement. It has to be filed with the registrar within 30 days. And at every year, if your deposits are, say if you have 100 rupees as a deposit that are maturing next year, then by this year, 30th of April, at least 20% of it, you have to have it deposited in a separate account. That is required and that's mandatory. You have to have a certificate which says that the company has not defaulted any or defaulted in payment of interest or the deposit at any point in time, because this is one of the points that will go under 164(2) also for directors disqualification. So things are interconnected. We need to remember that as well. Okay. What is the period of accepting deposits? No company is supposed to accept deposit which is repayable within a period of less than 6 months or more than 36 months. So that's the period that is defined. In case a company, for the purpose of meeting its short-term requirement, accepts the deposits beyond this, then that should not be exceeding 10% of the paid up share capital, free reserves and security premium account. So that limits has to be calculated, and we should ensure that it is within the limit and the compliance is appropriately done. A limit on acceptance of deposits by eligible companies. Eligible company we already looked at, and who is eligible to take it. 25% of capital, paid up capital, free reserves and securities, and up to 10% of paid up capital, free reserves and security premium account. By public company, which is non-eligible company, the what is allowed is 35% of paid up capital, free reserves and security premium account. And by private company, 100% of paid up capital, free reserves and securities premium account. Government company, separate set of rules depending on the type of company, but largely it is 35%. What are the important compliances one has to look into? It has to ensure the DPT1 is appropriately filed. The circular is in English. Certificate of statutory auditor is necessary, which is attached to form DPT1. Filing of a copy of circular within 30 days. And the validity of the circular has to be within expiry dates from the within six months of the within 6 months from the date of the financial year. Mandatory appointment of one or more deposit trustee for creating security for deposits in case of DPT, and within 7 days before issuing the advertisement inviting the deposits. That's mandatory. As per Rule 16, every company other than a government company on or before 30th day of June has to file DPT3. That's again necessary if you have deposits, if you have deemed deposits. Every company other than a government company has to file one-time return. So that was till 31st March 2019. And keeping separate deposit for the 20% of the deposit that is maturing next year, you have to keep the deposit this year before 30th of April. The 20% of the amount that is maturing next year, you will have to keep as a deposit in a separate bank account. Every deposit that you accept has to be paid with interest. In case if someone fails to repay the deposit or the interest, then it is subject to penalties. And deposit repayment reserve should not be used for any other purpose other than the repayment of the deposit. What are the exceptions to Section 73 in case of a private company? If it is accepting money from members not exceeding 100% of share capital, free reserves and security premium. If it is a startup for 5 years from the date of its incorporation, that's an exemption. If it is fulfilling all the conditions, that means it is not an associate subsidiary of another company, which is actually falling into this category. Borrowings is less than 50 crore. Sorry. Borrowing is less than 50 crore and it has not defaulted in repayment of any of the borrowings. If all these conditions are fulfilling, then it is an exception to 73 and it can accept certain deposits. And in case of specified IFSC public company, if it is accepting monies from members or members, then 100% of share capital and free reserves, that is allowed, and we'll have to file the details with the registrar. Then it is an exception. What are the penalties? Penalties are quite large here for the company and for every other officer who is responsible. He has to repay the deposit amount or the part thereof, whatever, with the interest due. Fine which will not be less than 1 crore or twice the amount of deposit accepted by the company, whatever is lower, and the ultimate fine can exceed up to 10 crores. And for every officer, imprisonment, so this is a criminal offense, to take deposit without appropriate, without following the conditions. Imprisonment which will extend to 7 years. Fine which is ranging from 25 lakhs to 2 crores. And if the person has done it deliberately, then it will go under Section 447. So 447 deals with fraud. So anything that comes under that fraud, then SFIO and all that can get triggered, and also detailed procedures can get triggered. So that will go under 447 if it is seen to be deliberate. So few of the quick case studies for understanding. There is a company, ABC Private Limited. It has a share capital of 5 crore and it wishes to raise another rupees 5 crore by the following means. So first one, it wants to raise another 5 crore. 2.5 crore from government agency, financial institutions, banks, or by way of commercial paper. Is it permissible? Answer is yes, because if it is raising from these bodies, then it is not coming under the Section 73. 25 lakhs by way of contribution towards capital by partners of partnership firm. Is that permissible? Anyone wants to answer in the chat?
No.
You can do so. Anyone wants to answer in the chat? You can do so. Yeah, I got one answer which says no. That's right. You can't raise it by way of by this means, I mean to say. Okay. Next thing, continuation to the case study. 25 lakhs from director by way of loan, whether it is permissible. Yes, no. I got one answer. It says yes. Yeah, it is permissible. 25 lakhs from issue of secured bonds and debentures. Is that allowed? Yes, no. It is permissible. So all these things are permissible. And 25 lakhs from ICD, intercorporate deposits, is it permissible? Yes, it is permissible. Okay, so I think that's how the deposits work. So I just put up one case study so that we can cover these things. We can quickly move on to section 185. So 185, just a second. Yeah. 185, we all know it deals with loans to directors. So 185(1) says no company can directly, indirectly advance any loan, including loan by way of book debt, or give guarantee, provide security in connection with any loan taken by director of a company or of a company which is its holding company, partner, relative of any such director, or any firm in which any such director or relative is a partner. So before undergoing into 185, let's understand one thing. Money laundering is not allowed. There are so many instances of money laundering or prevention of arrests under prevention of money laundering. There is economic offenses wing which is also looking into. So routing through of money is not allowed. So when we talk about book debt, book entry, and all these things, these are the things that we are trying to cover. There is 269 SST of the Income Tax Act also, which deals with it. Now the latest on the block is the reporting under Rule 11E and 11F in our audit report, which says that there is no direct, indirect lending, investing of the money or through the layer where the company itself is the ultimate beneficiary. So that has also come into place. So in a way, two principles when we understand together. So one is when we are understanding the Companies Act, any act that is prejudicial to the interest of the company should not be done. So in a way, if the money is just flowing from the company to the director without appropriate means, it is always prohibited. And there are few exceptions to it. If it falls under exception, then it is allowed. Otherwise, it is completely not allowed. So routing through of money or exploiting the company or money laundering, all these things should not be there. And that is why these sections are very much in place. Company may also advance any loan, including any loan represented by a book debt, or give guarantee, provide security in connection with any in whom any of the director or company is interested. If the following conditions are fulfilled, special resolution is passed by the company in general meeting. Loans are utilized by the borrowing company for its principal business activity. So that is an exception which can be done. What are the exemptions that we are looking at? A loan given to managing director or WTD, whole-time director, when such loan is part of the conditions of services extended by the company to all its employees. So this should be something like an employee loan, which is available to all the employees, and it is available to managing director also, and it has to be there in his contract or the agreement. Then only it is allowed. Otherwise, it is not allowed. In case if it is pursuant to any scheme approved by the members by a special resolution. So whenever we are talking about 185, it is only approval by special resolution by the members of the company, because this can be an act that is prejudicial to the interest of the company, because directors will end up taking away all the money of the company in some way or the other. And that is why this section tries to actually stop such kind of transactions. Company which is in the ordinary course of business provides loans or gives. So it's like a NBFC or a PFI. It's a financial institution which is actually lending money, and that is why it is allowed. Any loan made, guarantee given, or security provided by a holding company to its wholly owned subsidiary, provided it is used for principal business activities. Two important things to note here: wholly owned subsidiary. What is a wholly owned subsidiary? So it is completely owned by the parent company. So important thing to note over here is that, as we know, any company cannot be having only single shareholder. So there will be one more shareholder who will be a nominee for shareholder. So there are many cases which I have seen in my experience. They say that it is a wholly owned subsidiary, and when you check the documentation, the nomination file is not filed with the ROC. So the nominee shareholder has not filed the requisite form with the ROC. So it doesn't become a wholly owned subsidiary. This is very important. I have seen this in many cases, and it goes out of the exemption unless that nominee has to file whatever document has to file. He doesn't file with the ROC. It doesn't become a wholly owned subsidiary. Even one share if someone else is holding, it is not a wholly owned subsidiary. Compliance is very important. And then there are companies which are fined because of this kind of a error. And second, it is used for its principal business activities. Where do we get principal business activities? It will be in MOA as a principal business activity. That is very important to be verified. If it is not for the principal business activity, if it is for the auxiliary business activity, again, that is not an exemption. These are the two important aspects that one has to very carefully check. If you are an auditor, you will have to very carefully check these two aspects, because these are the two common pitfalls that we see, and people actually don't pay so much of attention to these two things specifically. Any guarantee given or security provided by holding company in respect of loan made by bank, financial institution to its subsidiary company provided for use for its business purposes. So again here, wholly subsidiary company and the guarantee is given, again the same principles apply. So you will have to look at it very carefully. Director or to any other person in whom the director is interested includes. Who are the other people other than director who gets included? Any private company of which any such director is a, so common directorship is point number one. A common, if he is a common director or a shareholder in two companies, in case of a private company, that's point number one. Any body corporate, which actually includes LLP also, because LLP is a body corporate, at a general meeting of which not less than 25% of the total voting power may be exercised or controlled by any such director or by two or more such director together. So if I am designated partner of a partnership of an LLP, then this will apply. And if I have 25% or more. So there are two interpretations here that can also be seen. It is 1 by 25%, and second, if I have the controlling power. That means if an LLP can have, maximum, there is no maximum as such, but then LLP generally has two designated directors. And if I'm one of the designated partner, then in a way I can control the LLP, and that is why it will be seen as, if you give loan to that LLP, it will be seen as violation of section 185. Any body corporate, the board of director, managing director, manager whereof is accustomed to act in accordance with the directions. So the board of the other company or the firm acts in the manner that I give directions. Then that becomes the entity to which loan cannot be given. There, section 185 does not apply in case of private company, in which share capital, there is no other body corporate which has invested its money. That means shareholding is by individuals only. If the borrowing of such company from bank or financial institution or any body corporate is less than twice of its paid up share capital of 50 crore rupees, whichever is lesser, and there is no default in repayment of borrowings, so then only it will be not applicable. Otherwise 185 will be applicable. And in case of Nidhi company, this is not applicable because it is actually in the collecting and lending of money itself. And in case of government company, as per the rules that are made or the GRs that are issued by each of the state governments, specified IFSC, public and private companies, it will not be applicable. Penalties under 185 are again very huge. In case of for the company, the fine is 5 lakhs to 25 lakhs. Director, it is 5 lakhs to 25 lakhs plus criminal prosecution, that is up to 6 months of imprisonment. And for any other person who is involved in this, again 5 lakhs to 25 lakhs plus imprisonment. So let's look at a few of the instances or cases. So request if we can answer, please. Sale of company flat to a director at prevailing market price, out of which the director pays 50% immediately and contracts to pay the balance amount in 10 equal installments, whether it falls under 185. Any answers? Okay. What two answers as no? Yes, it cannot be considered as a transaction of loan. making a deposit with the landlord under license agreement for securing a residential accommodation for managing director of the company, whether that will amount to 185, transaction under 185. Answers, please. Yeah. I get no. That's the right answer. It cannot be considered as a transaction of loan. 2, 3 more. Salary advance of 50,000 to employee who is the wife of the managing director of the company. Whether 185, not 185. Answers, please. Okay, it is not considered provided it is under the normal terms and conditions. Loan to a firm in which the director of the company is a partner, covered under 185. Yes, no. Yes, it is considered as a transaction under 185. So there is ABC Limited, listed company, which secured residential accommodation for the use of its managing director by entering into a lease arrangement of the lease arrangement with the landlord. As per the terms, ASP Limited deposited sum of 10 lakhs as rental advance with the landlord. Referring to the provisions of Companies Act 2013, decide whether the said deposit amount to be considered as loan given to managing director. Yes, no. Yeah, in accordance with 185, amount deposited with the landlord under license agreement for this accommodation is not considered as and the director who has entered into the transaction. So this is not covered under the given situation. One more. Mr. X is a director of ABC Limited. He has approached Housing Finance Company for the purpose of obtaining loan of rupees 50 lakhs, which he wants to use it for the construction of his residential house. Loan was sanctioned subject to condition that ABC Limited should provide guarantee for repayment of loan installment by Mr. X. So is this 185 or not? Okay, got a few answers. Guarantee by company for repayment of loan is not allowed and it falls under 185. I think that's all. Those are the case studies. Just verbally, I would like to ask one more. If there is a company which is into, say, for example, a jewelry or a commodity manufacturing company, which actually runs these kind of schemes, every month you deposit something and then after 10 months or 11 months, you can get some waiver on the making charges or some discount on the products that are bought. And that kind of deposits are running more than 12 months, will that amount to deemed deposit under section 73? Yes or no? Deemed deposits under section 73? Yes, largely the way the deemed deposits are structured, it says it has a long list of exceptions, but it says anything that actually crosses a certain time limit also becomes a deposit. For example, a share application money also, which is held more than certain number of days, it becomes deposit. So it has, and any kind of trade related deposits also, advances for which the goods are not provided or it is not fulfilled or the services is not fulfilled, it becomes deposit unless it is very critically seen and there are terms and conditions that will actually build up to the case backed by a legal opinion. I would say it would be a deemed deposit. So let's look at section 186 quickly. 186 is the layers of the company and the investment of the company into various layers. So investment, it is there's a definition of investment company, there's a core investment company. So before we get into the slides, I think I'm barely touching upon the slides for the concept, but then we are more of discussion or interaction mode. One of the things that is in the latest CARO which has been seen is that whether the company is an NBFC and whether it should have been registered with the RBI. So this clause is looked into very critically if you see these days, because that 50-50% ratio as 50% from main business and 50% from investing activities, the circular of RBI, is very much in action, and wherever there is this kind of cases which fall under this cusp, and if something becomes a core investment company, then these sections trigger, and then you will have to be very careful, and also the reporting under CARO has to be very critical and careful over there. To just give you an instance or an example, a practical example, company A invested in company B, which was its subsidiary, but because the B got listed and it gave bonus shares and it gave dividend also, the income from investment activity actually crossed 50% of company A. And then there was a detailed discussion, deliberation on whether the CARO clause gets triggered and whether the company has to write to RBI to get a NBFC registration. So we have to be very careful. Just for the knowledge, they wrote a letter to RBI, and RBI said that, okay, this is a one-time activity, you may carefully consider and things like that, subject to certain conditions. Now, that's not a generality, but I'm just saying that, it's subject to certain things. RBI gave some permission for some amount of time, and then to balance it out and things like that. So these things are very critically seen these days. So please be very, very careful in terms of what you are looking at and how you are, conducting the audit. Loan and investment by the company, 11E and F, we discussed about anything that is going round and round and which is actually coming back to you as an ultimate beneficiary. And if there are more than 2 layers, and if the money is getting invested and you don't know where the money is landing up, all these things get covered under 186, and all these things get covered under rule 11E and F, which we have to newly report under the 143.3 section of our audit report. So be careful about all these things. What are the exceptions to 186? Company is acquiring another company incorporated outside India where such more than 2 layers are allowed, and subsidiary is having an investment by any law at that time which actually permits that kind of a investment. Further, 186.2 says no company should directly, indirectly give loan to any person or other body corporate, give guarantee, provide security in connection to a loan or other body corporate, and acquire by way of subscription, purchase or otherwise security of another body corporate, and it lays down the limits, which actually is 60% of paid up share capital plus free reserves plus security premium account, or 100% of its free reserves in security premium account, whichever is more. So this has to be evaluated on the every reporting period and ensure that this has to be properly complied with for all purposes. In case the loan given or the guarantee given or the security or the acquiring of security is exceeding the above limit, company has to take prior approval by means of special resolution at a general meeting. What is the exception? If it is given to its wholly owned subsidiary, so please understand the catch of the wholly owned subsidiary and ensure proper documentation is verified, or a JV or acquisition is made by holding company by way of subscription, purchase or otherwise of the wholly owned subsidiary company. So that's the only exception to it. And the company has to disclose all the loans, guarantee, security in the acquisition in detail to the respective, in the general meeting as well. Company has to disclose all the things to members in the financial statement. So detailed disclosure with respect to 186, that is as to what is the loan, investment, guarantee that is given, and how it is proposed to be utilized by the recipient of the loan or the guarantee or security. So you have to be very definitive, and you should be knowing as to where the money is going. So these are no non-applicability, so it is not applicable to broker. Second is you cannot give at an interest rate that is actually lower than the prevailing yield of 1 year or 10 year of government security. So always you will have to compare the rate of interest. So rate of interest should not be prejudicial to the interest of the company. In case there is default, then you will have to be doubly careful. You will not be able to lend it further. And every company which is giving loan or providing guarantee has to maintain a register. The register has to be kept in the register office, and it has to be open, and it is to be available for inspection also. These things will not apply to anything that is done by the company which is an NBFC or a housing finance company, which is in the ordinary course of business, is having these kind of things. And it is also not applicable to any investment made by investment company. Shares that are allotted, that is private placement or something that is allotted, and in case of investment or lending company by a NBFC. And in case of government company, it's based on whatever the ministry ensures, that a ministry gives a GR or specific rules therein. And also there is specified exemption to IFSC and Section 8 company, and these will specifically apply in the given cases. What are the penalties under Section 186? For the company, it is 25,000 to 5 lakhs. And for every other officer responsible, it will be 25,000 to 1 lakhs, and also the imprisonment up to 2 years or both. I think largely that is what I had to cover. I've been able to, I think, complete in more than an hour. But glad to take any of the questions if anyone has any situations or any questions anyone has on 73, 185, 186, or on any of the opportunities that we spoke about, anything that we want to discuss.
Members, any query, please call to Madam. Madam, I have a query.
Yeah, please.
Virtual CFO, can an Indian company is able to appoint the virtual CFO? Do you have any restrictions over it, like anyone can appoint it?
No, you can be a CFO. There is no problem.
Second question pertaining to the same also, like can we appoint as a 2 CFO in a company, or like can we take it as a only one assignment?
Sorry?
Can we able to appoint 2 CFO posts?
Means can you be CFO for multiple companies?
Yeah, correct. That is my question.
Yeah, so wherever it is required that a CFO has to be appointed, if it is a virtual CFO position, there you can be CFO for more than one company, but then if it crosses a certain threshold and limit that are provided, then you cannot be for more than one company.
Okay, got it.
Yeah.
Another thing is, madam, what is the qualification to be appointed as that merchant banker, madam? Can you throw some light on that?
Okay. So merchant bankers are actually regulated by ICMA, which is Capital Market Association, International Capital Market Association. So merchant bankers are merchant bankers are largely the front runners or the lead runners also, the book runners also. For example, entities like JP Morgan, Edelweiss Wing and things like that. So if you want to get into equity research, I think step one for any chartered accountant to go into merchant banking is that ensure that you complete certain courses from the stock exchanges, BSE, NSE as the case may be. Step two is gain experience under equity research in any of these equity research houses. Then get into merchant banking, and then you can be at a certain, depending on your experience and your expertise, you can be at a different position over there.
Can you practice in chartered accountant be a merchant banker, madam?
No.
We can't.
You can't.
Okay.
You can't. Okay. It's excluded.
Okay. Members, any queries? Okay. Madam, on behalf of the Salem branch of SARC and Erode branch of SARC, I solicit my vote of thanks for the wonderful presentation. So if any query for the members, I will share the same, madam. If time permits, please share the experience of you. Thank you very much, madam.
Sure. And thank you for the patient listening and also answering the questions. I think just to make it interactive, I just put up some case studies so that, people are interacting. So thank you for answering as well. It's not about right or wrong, but then making an effort itself has to actually takes your this thing. Thank you for the opportunity and look forward for more. Thanks a lot.
Thank you, madam. Thank you so much. Nice of you.